Let's go, Fred. Let's go. Good morning. What's up? Ooh. Oh, did I skip the intro? Hold on. Y'all don't want to watch me eating my breakfast burrito. Like and comment. There you go. Say hello. You guys got it. It's so much fun waking up and hanging out with you guys every morning. It's a highlight of my life. Best thing I do. So, one quick correction. VIX expiration is the next Wednesday. I forgot that we had New Year's on Wednesday, so we kicked it out a week. This is what Flu Brain does. It makes you forget stuff. I completely forgot. It's literally New Year's. So, VIX expires next Wednesday. So I got the same triple B for a week. S&P goes right up to 59.70. Yellow line, illiquidity pivots. We talk about that. Margin buffer limit. Easy peasy. Like right up to it. And it was so crazy. Does the CPI completely sell off from here? Or is this the turnaround for the rally? You decide. Okay, let's get rolling here. All right, friends. What a morning. What's up, y'all? Good morning. Ooh. What's up? All right, quickie, starting off the morning. Can I look at the DAX today? Yeah, maybe on TradingView. They have a DAX is EU30. What was the ticker for TradingView? God's been selling Germany 30. That'd be the one. Here we go. I think that's the handle they have for that. On the daily chart, the DAX is pushing higher. Look, all-time highs today on this read. Pre-market. I haven't looked at TradingView in a million years. Pop from 2440 to 2600. That's incredible. For yesterday's contest, I'll send you a DM. I'll as soon as I get off the stream today, I'll send it to you guys. Like, it was kind of like, as soon as I got off the stream, I had to go take care of iDoc. You know, she's just dying in the other room. Our head that was working on this project is back from vacation as of yesterday. So the DD band table is what they're working on right now. It should be done within days. He was out for like 3 weeks. It was a sit out day. Okay, not a sit out day. Nope. So here's how this works. Outside of these bands, we give you guys the rules. What's up? Don't forget to hit that like button on the stream, guys. Bottom right, we're starting half an hour early for y'all. Getting this hot and steamy CPI action going. Where's my pencil tool? Pen. So no, not a sit out day, but looking for setups. So outside of these bands, right, on the upper band here, I only do longs only. I don't try to fade this, longs only. If I could find them, but only on strong pivots on MHP. Right, bull zone. That's it. And bear zone top. Right. So remember, 88% of days tucked back in here, but this could be one of those, 4% days where you have the event push the market higher. I don't want to try to fade this. We'll take a quick look at this. The VIX is still in kind of that weird, strange spot. We roll over next Wednesday. I was mistaken when I said this Wednesday because I forgot we had a holiday that on Wednesday. The 1st was a holiday, so pushed out. VIX rolls over next week. You still have the mechanics from that. So right here, 1637, VIX is still about overshooting pivots. We have tapped what we call an illiquidity pivot. These yellow lines, you guys see how good our yellow line calculation is? I know it's kind of like, I like to brag a little bit, but damn, we're good. Look at this. Popped right up to my level. 21,325 on the dot. 59.70 on the dot. Literally right there. So you guys, that's one of our classes in our 20 days profitability mindset masterclass. Teach you all this stuff. How to do these calcs. This was a super simple setup. This is an old one that's been sitting there for a while. This level is calculated on November the 4th. That's how great those pivots are. I mean, look how much it's pivoted there. There. Now CPI. Fed tested it. CPI tested it. Y'all see that? All right, these are the levels. Levels to consider. 21,325. Thank you. Call me the wizard for nothing. Thanks, my man. That's the guy. That's it. Fucking walks right up to it. Boom. Now this is where, remember, CPI was better than expected. It was higher than a lot of the analysts' expectations. Like a lot of the analysts came in close to like 3 and such. The overall, I think median estimate was like 3.3. A lot of analysts thought it was gonna be 3. I came in right at 3.2. So it's like, all right, that's a nice little run up. Is the market still bearish or bullish? Remember yesterday, 2 of our 3 greater market indicators were bullish. I tweeted about that with like a capital letters. Like, let me get up in here. Let me do the old told you so posts. I love doing these. Even when you predict the level exactly to the penny. It's like, you think people will learn how to do this? $21,325. All right, so we're going to see how we're going to trade this today. What do y'all think? What do y'all think in general? Like your general feel of the market. If you were to take a guess, like how you feel about the market, take a guess. Not new triple B yet. Not until next Wednesday. I forgot we had a holiday this year. An old pesky thing called New Year's. So I was off by thinking it was gonna be last night. Not yet. Okay, 21,149 outside of DD band. So market's pushed outside of here. I don't do any shorting up in here, even though it's a very high probability. The market is still garbage and it wants to fade. We had DD band and monthly maps come in a little positive, right? Monthly maps are forecasting after this week, the volatility is looking like it wants to dissipate. So we'll see how the CPI read changes things. But even as of yesterday, positions were shifting around to be more bullish. Bullish support in the S&P appeared less than a week out. So my talk yesterday was that the market was trying to find a bottom, that we would know very quickly if that's going to happen or not. And now we'll know next Wednesday. I thought it was going to be today, but we'll know next Wednesday. This could be bottoming out. Visionary, thanks. Hope we're feeling better. I'm feeling a little bit better. I think iDoc really is dead today. Like she was dying yesterday. I think she's dead. You know, we're poking her with a stick. She wasn't moving. Rest in peace. Very bad. She has it worse than I did, man. Like we were both sick at the same time. It was like me, then her, and then she leaves to California. Well, me and her, and then we kind of get better, and then we both get sick again with our throats, and then she goes to California literally as the fire started. So she's breathing in like smoky, gross air this whole time. She's on a work trip for like a week while she's sick and getting sicker. And then she flies home and then immediately just gets like 10 times as sick. Like she's burning up. I mean, she has it worse than I did, but I had it really bad too. She might not make it today of the stream, so she's going like, yeah, I'm going to try to take her to the doctor today. Wait till after 10 p.m. 10 p.m. Eastern bullish. You think so? I'm curious to see how this turns out. As far as today's news, do we have anything else coming up? Today, nothing big but Fed speakers and Beige Book at the end of the day. Well, Beige Book's not too terribly like unimportant. Are y'all want to crush it today? Y'all saw I had a humongous day yesterday, right? I come back in. You know, I don't trade all the time when markets are shitty. How many times the market is sold off, I set out. We teach you guys in our masterclass indicators that tell you markets are crashing. We have so many good ones. And I'll show you guys really quick. This is my Thinkorswim history of yellow line, but I like to use this as an example. So just so you guys know, in our masterclass, we teach you this particular thing. I had an indicator that had me sit out of this, had an indicator that had me sit out of this, had an indicator that had me sit out of this and this. Each one of these crash days I avoided. You guys watching me stream, and I sit here and I'm just like, I'm gonna let the market collapse. I'm gonna wait till I get my returns back. You guys saw me yesterday. Somebody in chat type how much y'all saw me make yesterday, just on that little day. As you come in here and you're like, why he's not trading? This guy even trading? And some days I choose to sit out because I'm just better than everyone else that does this. There's a whole reason. If you guys want to know, or does this on YouTube, you guys are probably much better than I am. But I'm telling you, on the YouTube side, everybody's always trying to trade up and down, left and right. But what the pros will tell you is that your strategy applies under certain circumstances only, and apply them under certain circumstances. As you can see the comments below, it only took a little tiny day like this for me to walk in and start making some money again, right? It was all across my Apex accounts. So it doesn't mean that I have to catch every direction, catch every short. I've been patient and taking some trades, taking some trades. Wait on this, wait on this. This day was money, just this tiny little thing. So what am I going to do right here? Well, let's let the market read out and see if there's anything good. Remember, you don't need to catch this or that to make money in the market. It stays like this where I pop 10, 15, 20, 50K sometimes. It stays like this where I lose that much if I flip the coin the wrong way. So the trick is to make sure you know which one it is. You guys are right. Don't forget, everybody. Bottom right. Hold on. Let me do my which way is left, which way is. I always get confused in this. Oh, this way. All right, here. Right here. Look down. There's a button. It looks like this, I think, or maybe it's an arrow that points up. I don't look at YouTube. Click it. Like the stream. OR trades, new to futures, passed 3 evals and blew them. Oops. We're trying to pass eval. I'm like 600 away from 1 to the fresh broke. Hang in there. I got faith in you. Trader funding programs are hard. We give you the tools. Hopefully, stick around here. We'll teach you a little bit on how to fight the drawdown. You'll hear me. Now, again, I can't give you investment advice. Well, I guess in the eval stage, that's all paper trading. So I give you advice all day long in the paper world. So those are designed to squeeze you out pretty quickly. Volatility is your enemy when you're trying to pass evals and pass funding programs. Volatility will be the thing that kills you. So we have a couple of little rules of thumb. If you're trying to await the opportunistic approach to how do I pass these really quick, look at this indicator called VVIX. When VVIX is above 100, you're going to have a hard time. You're going to hit drawdowns all the time. A rule of thumb is the market is less choppy below 100. So you don't want to deal with choppy markets all day long. Choppy meaning remember yesterday's choppiness, right? What a garbage thing the market was, right? VVIX that high tends to lead to less trendy and more choppy. Like this. You guys remember this, right? Market just dumps midday, then rallies into the day. What the hell is that? That's what happens when the volatility of the VIX is high. And so it just tends to be your worst scenario. So we tell you a couple of things. Number one, I'm going to give you a number, and this is the easiest time. Anybody out there trying to pass the trader funding program, here's the secret. There's a number that I'm going to give you once a month, and this number is going to last until next Wednesday. If the VIX is above this, I'm telling you, if you're having a hard time, you want to pass all 20 of your accounts, right, to go funded, this is the trick. If you wait until this environment, you're going to have a much easier time dealing with the drawdown. So you want to see VIX futures less than this number, and this number only lasts until Wednesday, okay? Typing it. And you want to see that. Both those numbers being above those levels means that the volatility is going to be high. And volatility is the enemy to day trading drawdowns, to daily loss limits or trailing drawdowns especially. You'd hate to be right to short the market at the wrong place and get squeezed, on the S&P 100 points or something before you're finally right. Choppy is what blows you up. And the trader funding programs design it with the trailing drawdown because they know you don't know that. Does this make sense? So good luck to you. I'm going to tell you, waiting it out to where VIX is just kind of away from those levels, you're going to see more trendy, less choppy. And it's a 9-day difference. I'll tell you what they look like. Let me show you 9-day difference on my chart. Let me make a blank chart here. I'll teach you guys something. Once I started mastering the VIX, dude, my trading went up 10% more win rate. There's a complete difference between, y'all see right here. Let me turn this music down. It's making me want to fall asleep. Y'all see the difference between left side, right side? Y'all see how this is kind of just inching its way higher? And this is what the fuck, man? Oh my God, all up and down, right? Even the chop, the daily chops are bigger than the daily chop here. Can y'all see the difference? Your daily chop is tinier here. This is the easiest trading you'll ever do. It's times like this that you want to really put your nose to the grindstone and work. Y'all see that? This right here is what you're trying to do. This right here, you're going to waste a whole lot of money blowing up accounts and getting lucky, and then blowing up accounts and winning, left and right, up and down. But does everybody see, right here, there is a big difference between that type of environment and that type of environment? So those two VIX will clue you in to markets doing this. Even the sell-off day is a nice little trend down. It just falls really quick. The sell-off days here are a fucking nightmare. Look at this. Down, way up, way down. The chop is different. And that's when the VIX divided itself into being one side, other side. And that VVIX popped through the roof right after FOMC, and it changed the market. Even the sell-off days, you see how they're pretty clean. The market just falls and then falls. It's not chopping. It's just falling. This is nope, just kidding. Oh, I'm kidding. Down, up, down. You're wait, what? What's going on here? Down, up, down. It's too much chop. So trading in this environment is going to be really hard. What I do is if I want to pass 20 evals, I usually pass them all in a couple days. Like if I run Apex, I can get my Apex accounts and I can hit the limit within like a single trade or two. If I'm really putting my nose to the grindstone, I'll buy all the accounts if I need to when they're $20, right? And when they're 90% off sales, and ETF, same thing. You know, when they're all like 90% off, I'll load up on the evals that I need, as many as I want to buy, so I have them in reserve. And then when it comes time to pass them, I just smack them right there in environments like this when we get back to it. So like I'll wait a month to get started, and like I definitely won't trade my PA accounts too often unless I got a really good signal like yesterday. So if you guys are having problems getting funded, the trick is you gotta wait and trade in the right environment. Don't pay attention to favorite, entertaining YouTube guru or Twitter guru or whatever that's trading every day. That kind of person is blowing up more accounts than they're making. Y'all see what Dakota said about yesterday? Dakota quoted what I said on his stream. Let me tell you. I mean, on his Twitter. Y'all know Dakota from Top Step. Retweeted me, which was very kind. But I said something very substantial. Let me read it to you, okay? I seem to be one of the few people in this industry that gets the massive scam and fraud brought before your very eyes. Let me see if I can find where Mr. Dakota, and I quote, "Most of you guys are being defrauded and lied to by a lot of people." So essentially he asked a question. Now I'll ask what you guys think about it. Need answers, please. Why don't more prop firms care about live traders or even talk much about them? Live traders meaning the people they promote to their live account. Why do they keep their simfluencers in sim accounts? Why have truly a good trader keep them in a sim account? It's all smoke and mirrors. Why pushing affiliate codes? And I go, what kind of question is this? But of course the obvious, like because all of these influencers are actually terrible at trading. Reducing them to one account, which is what a live account is. You can't play the sim game. You're in one account now. It's not a great commercial because up and down in one account is not the same as people that are up and down, $2,000 in 20 accounts. I made 40K today, right? That's such a better commercial. And I said, you know what it is, right? They let them blow up 500 Apex accounts, but then they show up with the 50K payout on the 20 they didn't, at $2,500 a pop. What you're not seeing is your influencers showing you all their blowups, is what I'm basically saying. They're probably not even profiting, even though it looks like they're making money. So I said, so much easier to draw in members with those big gross payouts, and that's even before taxes. And so it's kind of nice to see, like he says, by far the best answer I've seen in a while, someone who gets it. It's very important to always ask questions, always. He's for simulated environments to earn, grow, and become a trader, but practice sim accounts, you struggle, yada, yada. But simfluencers, right? The people who do nothing but live their entire existence in their sim to funded account is likely pulling the wool over your eyes. The only reason I even do it is because it's popular, and I got to do what the kids do these days. I got to do what's popular, or else nobody will watch me. So I had to jump to the bandwagon. For years, I thought it was a silly thing too. I would only trade one account, but I'll tell you, when I traded one account, my own real account, that's all I traded, was my own futures account. I would do like 5K to 50K challenges or 5K to 100K challenge, and I would do it all live on stream. But you know what? Stream tripled in size once you start trader funding programs. So the difference is that as these influencers jump in and they're just ready to go, basically paper trading. Every once in a while, take a payout. But that's what's happening. Anyways, so cool to know that somebody else seems to get it. I always say the same thing. These kids out there might be drawing payouts, big payouts. Doesn't matter how much it is. Real futures account is like, your goal is to do that with your life. If you make enough money trading the funding programs, your goal is to immediately go to your real account as fast as you can, because sim funded, it's 1099, you're tax crazier, profit split, you just lose so much of your money. The goal is to get a big fat windfall and then start trading on your own. And if you need to make money and rebuild a bankroll, then you go back to the funding world. No shit, we skipped the bid. That is awesome. I was looking for evidence of velocity logic trading, but we didn't go that far. Look at this. Look at this. It even skipped ask. There weren't even quotes there. The market just moved so quick. So there weren't even contracts on these tiers. That's how quick it moved. All right. Perfect with the impact red line to get us going. But yeah, I mean, that's kind of the rule, right? You want to get your payouts and then take all your money and put it in your own account, turn your own. Don't forget to hit the like button, guys. Get ready to go. Market opens in 10 minutes. What high hedge pressure being outside of DD bands means, it means absolutely nothing. It is what it is. Hedge pressure is what hedge pressure is. You kind of want one outside of DD bands, especially if you're there, because good thing to trade. All right, 59.2732 impact line. Give you guys a number. Okay, we're gonna do catalyst really quick. Come to your table. Go to your Rocky Seed platform. Go to your catalyst. This is an S&P. Or sorry, Nasdaq. Go to Nasdaq. The distance is 156.25. Catalyst is active clearly, right to the upside, but that's good. Catalyst active to the downside. We don't trade upside. We still try to find trades, but we'll look at it. Hold on. But still cautiously. 157.25, right? Oh, sorry. Hold on. 156.25. Oh, I'm an idiot. I'm on the S&P here. Yep. Okay, hold on. Yes, it is 42. Cat active here. You're going to see this is a high volume pivot. This little trick, this little number that's in our tool, that's going to be a high volume pivot when you touch it. So there's the cat on 59.42. So we're going to go back here. Do all this on a tick chart. Okay. Let's do the calc on Nasdaq really quick. We've got a minute or so till market opens. No, I'm sorry, 8 minutes. Plenty of time. The stream is great. I was thinking about opening like an hour early, doing some pre-market chat or pre-market talk. What do you guys think? That'd be fun. For those that can tune in early. Okay, 150 what? Go to your risk interval table, get this magic number. This is the magic number structures of futures right here. 156.25. Our algo is on point. Watch this. Ready? If this hits, you guys got to take the class. By the way, we start over today. Today is class number 1. We go through all 20 classes, 1, 2, 3, 4 to 20, and we get to 20. We start all the way over at 1. So today is the first class. If you guys ever want to take our classes, you get 20 classes for $20. It's the best book you will ever read in futures trading, I promise. By a handful, by like a long shot, literally. We start over today. So go here for the $20. I tell you, everybody come today. The first class is guaranteed to blow your mind. What you didn't know about the market. I teach you a guaranteed winning strategy right out the door. It's guaranteed. It doesn't lose. It's never lost. And as a matter of fact, so many people use it. It's the most common strategy used, and it's a hypothetical strategy that doesn't lose, and it involves randomly trading. It doesn't even have an indicator that fuels it. It's interesting how this works, but we teach you this as a starting point to an understanding. It's not necessarily an actual strategy we'll use. It's a hypothetical thought experiment. And we build off of that thought experiment and actually build a real strategy to teach you something really cool. 156.25, here it is, 156.25. I take this number, I put it here, make a box, and then I draw a little pink line here. The market is catalyzing itself higher, just like that. You guys want to learn the most interesting thing you've ever learned ever? When's this come from? You'll have fun with this one. I promise you that. I don't want to spoil the surprise, but class number one, it's the first thing we start off with is the unbeatable trading strategy. It works in every instance of every back test. It works. However, that's just said purposefully that way to kind of be like shocking. It's not really, there's no such thing for you as an unbeatable trading strategy. Just letting you know that. As a hypothetical situation that you will never do, but it proves a point as to how your strategy that you're using now actually is failing, because it's missing some key components of what makes this hypothetical strategy always win. As people are saying, you want this class, I promise. Big line stands for is a catalyst. So no DD numbers on which ones? Yeah, we're still fixing the table. I know it's been a month. Our peeps were on vacation, so I'm gonna press them today to get this fixed today. Hold on. What is it? Risk interval in NASDAQ? 156.25. Here. 156.25. You have 155 as well? What? Oh, was I not? Oh, I guess I wasn't logged in. Yeah, you guys are right. Well, okay. It's 155.5. Yeah, you guys are right. Okay, my bad. Let's change this a little bit. My bad. Yeah, we gotta be around the penny here. I don't know why mine didn't update. Maybe I was stuck in a 42. Still 42. Okay, yeah, you're right. You're right. You guys are right. Okay, there it is. So this is the return levels, right? So this is where catalyst active markets like tend to like compound and move faster and things like that. Chaotic. We usually don't, on the downside catalysts, we usually always sit out when markets are crashing. When markets are catalyzing themselves upwards, there's still no sit out, but it's still a trade small. So right now in an upward catalyst, the market, I only trade small and I trade long at all. Today is likely to answer the question, the big question we all have is the market fading, market's reversing? What do you guys think? Let's take a vote. Market reversing or market fading? Cody says, what's the risk interval? So part of our calculation suite, like our indicators, are hacks or exploits. So we're not doing technical analysis here. So what I did was I reverse engineered the CME group, who runs all the futures. I reverse engineered their own equations that set margin requirements. And risk interval is a pivot that guarantees high volume when you tap it. So we are like, they call us like the hackers of Wall Street or, the wizards of Wall Street, whatever. We actually read patents put out by the exchanges, and we read all these technical papers they put out. And then we use their own stuff against them to make indicators for you guys. So the risk interval is a structure point that says that the market moves that distance. Let me show you something really quick for market opens. If the market moves that distance on an event or greater, you're going to start to see unusual behavior. And on the downside, that's one of the crash indicators we teach you. So an example, I think I might still have them set up here on S&P and NASDAQ. So on NASDAQ, right, whenever you go down that distance, just that distance in that table on an event, the market, we sit out automatically, and it's a crash detector. So if it moves that distance, I sit out. You see what that is right here? So that same pink line is that distance in that table from Fed. And as soon as the Fed breaks here, it moves this distance. We're all shouting in Discord, catalyst is active. When it happens, the markets can speed up and crash. So better safe than sorry. When those things trigger, I get out of the way. And like I say, having back pocket crash detectors is one of the best things. It's just a number in a table. But the number is based on the probability that people... Oh, I drew that on the wrong freaking chart. It's the probability that large market making institutions, God, that was loud, are in margin calls. So even this day, when we broke through that pink line, the market just sold off, fell off. So the idea is to have, you know, crash type indications to let you know when the market's just unstable. So I only trade when the market's just clean and stable. Like, you know, you guys watch me. I'm the trader that makes the amount of money that you probably are looking to make. And so when I'm trading, I'm not always trading every single thing. And there's certain times I do sit out because these kind of things are active. And what you never see me do, I've been trading on YouTube since 2016. I'm on the OGs. And I'll tell you, I've never blown up an account one time on my stream. Once I started getting real serious about, you know, live trading and here, I'm always so cautious. And this is one of the reasons why. Okay. No, that's not the level. Hold on. Okay, so let me show you. So we're going to have our printout really quick. Liquidity map's going to give me my 59.41 is the level. Okay, watch when you hit the 59.41. That's this particular level right here. 59.42. Okay, now so up. So outside of these green bands, I'm always looking for longs if I can find them. Well, let's see. Nasdaq's level. I'm going to give you these key levels so on my chart. 21. Oh, crap. Oh, come on. Go faster. 21, 155. Okay, I'm going to draw really quick. Watch, I promise. Stick around. You're going to be happy that you did. All right, let's go ahead and take a look. Let's see if we can liquidity map printouts. Ooh. Okay. Okay, I see you. Remember, guys, hit that like button. Everybody, bottom right of your screen. Go down really quick and click that like. Do it right now. Give us some love. 300 people in here. 85 likes. I'll have to come through and slap y'all with the lazy stick. Toss some love to yours truly. Get that algo going. Okay, so this is a long setup from here to where we don't have a target. BLD, open orange, open. If you support it open, continues to ride. If it loses 5,900, it's all the way down there and fade the entire thing. All right, resilience is great. White line is positive, so that's going to support the upward move. Today, I think we move up. But the best part is that this orange line is where I'm going to take that bounce. Let's look at that's S&P futures. Let me get some information on SPY. So Nasdaq is in a similar boat. I'm looking at Nasdaq QQQ to get a little bit of a read on Nasdaq futures as well. Nasdaq futures has pivots similarly right there. If we lose in here, it fades all the way down to there. So key levels today. If we lose the open, today's opening price in equities, it's a sell-off. Right on the edge, the stocks are supporting the upward gap. So just keep that in mind. Risk interval should be the target. And let's see if we can find something nearby. Okay, so upper targets. I usually take these big up days cautiously, but I do like the long setup here. It does not look terrible. Let me see if we get one little bounce right here on QQQ. Now, again, what I'm going to do is I'm going to risk one account and take a small, tiny long right here. Actually, let me do NQH. Trade EP. But the thing is I don't have any upper targets. That's the one thing I don't like about this. I don't have a good clean place for it to trade to. The S&P has a bear zone at 600, so it does look good. It's good and bullish. Probably continuation from here. There's no fading this. There's no short setup. I just don't have a good read on where I'd long to. Let's get our DD bands outside of here. Okay, there they are. $59.82. Yeah, that's probably a good one. Okay. Now, in days like this, what I do actually like to do is try to see if it will fade so I can get a dip to buy. But inside of here, I don't think we're going to get it. So what I might actually do, let's do micros. Anytime I'm trading inside of a catalyst, like outside on the upper side. Downside cats, I don't trade. Upside cats, I'll trade with just a few micros, something tiny. Not a terrible look for today. And I do think it's still got the power to go up. VIX is good. VIX in decay pattern. Now let's take a look at QQQ over the next 3 months. Let's see what the actual 3-month outlook looks like on the monthly maps. Let's see our forecast. QQQ, really nice, strong bull support and bear side weakening. I think the bull market's back completely, guys. I'm not kidding you wrong. I think we're back to golden. Let me just have some fun with this. Little red. Put some markers on the table. Just 5. Like I said, today I have no desire to go out there and fucking blow up shit. But I don't hate the idea that I could put some micros on the table. We're going to play with roughly 500 bucks left or right. This is kind of a gamble. I am betting that the market does hold the fort. Let me tell you some of my indicators that are telling me this. So I'm trading futures. Like I said, I'm going to keep it nice and tight, just small. If we hold here with this resilience number greater than 0, then it can continue to trade higher. If I lose this area, then it's a dip from there right back to there. The ideal setup is to long from here back to there. Like I said, I'm just putting some micros on the table just in case it's a gap and go. The 5 micros would run pretty quickly because S&P has a really strong push. How do you convert the numbers? Well, what I normally do is I just look at one, I trade the other. So let me give an example. Let me just do it over here. This is kind of what my other screen looks like. So I usually have 2 screens, right? So I'm going to just risk one account with some micros today instead of trading all 20, right? Risk is high. So I'm just like, okay, let me just take it easy on this one. All right. So the way that I do this, just like that. Let me keep my futures on the chart. I look at them side by side and I trade that way. So I don't necessarily like, actually, let me do, and I don't expect this to be a big run-up trade, but I want to plant something just in case. Oops, that's weird. Just in case it does run. If it doesn't, then I'm not going to lose like maybe 500 bucks. That's it. And I'm not really, and again, this is in one account. I'm touching it in like one account. That's it. That is only it. Yep. You start losing MHP, I'm going to walk out of this. But yeah, I just put maybe like 5 micros on it just to get a little bit of something. And so what I do is I put them side by side. If you try to convert one to the other, you're going to have a really hard time. Okay, let's close that out. I don't like that trade. So basically, like I watch one and I trade the other. Does that make sense, Jamie? Because it's hard to convert one to the other simply because when you're converting one to the other, it's never the same when you get there. An example, watch. When we hit this pink line, you're going to start to see like a high volume spike. If I were to convert like this orange line that's calculated in SPY to S&P futures or vice versa, when you get there, it won't be the same level because they're not like trading one-to-one. Markets don't like gaps. I think I'm in the camp that markets like gaps, but either case, well, bull markets like gaps for sure. But if it sells off, the gap is what it likes to do. Definitely will fill it if it's selling. So let's see what we get today. Nice little overshoot. Like I said, I was like, let me put some micros on in case it was a gap and go. And it wasn't necessarily that. So let me make this a little bigger so y'all can see. What liquidity map does, top right, is showing me where the flow path is. And it's using options to find flow path in futures. It's a brilliant technique that we've invented here. What this is saying is that there's a little bit of pressure pointing direction. Right now, above this orange line, things are pointing up. That's why I took the long. And it might have been the right trade, but the risk, I just kind of bailed on it, put some micros on it. From orange, from here, this little U shape that I'm moving my mouse on right here is this little U shape right here. If it breaks above this level, it continues to go to next resistance. That's the long I was trying to take. And it might actually be the right trade. That's the one thing about it. It might be the correct trade. It's a little volatile, so I just bailed on it quick. Put some micros, but it wants to do that. This is what the market wants to do. Okay. And the thing is that I could see that if I break that orange with velocity, right, and with some volume, I mean, it's falling to there. But usually when the markets move on events like this, I don't necessarily take like big risk on the table. Volatility is dropping. Oh yeah. So all of our indicators today, our greater market indicators, are all bullish. Everything's bullish again. Everything looks great. I can't complain. But the question is, how's the market going to respond to today's CPI? Where does it trade to, and where do we go? So I'm calling up. I did take the trade. I just bailed on it. I didn't like it, so I'm not going to touch it from here. I do think it's going to go up. So those of you in the long side, congratulations. Why didn't if I bailed on this like a wuss? But that's okay. You know, 38,000 yesterday, minus 500 today, not a big deal. I'm terrible with in volatility. I don't like playing it, but today I'm terrible on this entry. Yeah, for sure. Look at NVIDIA monthly map. Let's take a look at it. Zero sum knows it. I'm unlucky. I'm unlucky sometimes. Although I do pick the direction right. I just had the worst. Oh my God, NVIDIA. What the hell is going on here? So NVIDIA, this is a very volatile, bearish NVIDIA. That's insane. But starting to develop something a little bit in the middle. But when the bull side is like stacking away like this, and the bear side is, and this means volatile. NVIDIA's just range is getting like wider and stuff. So. All right. So one of the things that I'm not real concerned about is like where we trade to. I need to find me a good exit target on the upside. And the yellow line was basically it. Like outside of here, 21,532 is where we go if we break this yellow and keep going. So I don't have a good upside target, which is kind of why I'm not like super excited about taking a chase here. The market has been trying to sell for every chance it gets. And while all the indicators did line up bullish today, I'm certainly not trying to short this and fade it. But I am cautious that the market is still trying to figure out a way to go down. So inside of here, while that yellow line is typically the target we go to, 325 is basically it. Breaking 325 and continuing to go, it would be a nice breakout run. So today in futures, on QQQ is 325 is upper target. Where are we set right here? 325. So because it's really close to my upper target, I think today I'm going to choose to like not make an exciting trade as well. What I'm worried about is that it's going to resist against this and try to find every excuse it can to sell. The market has been trying to sell, and it would be so weird to be caught upside down. I'd rather miss a few inches up than to catch a mile down. And while all indicators are greater market, all three of them right now are bullish. So that's good. So it looks like the bull market is trying to be back. So I'm not really scared of this, but I don't have a good target to trade to. This is actually where I usually trade to, and I X out. If we break above here, it's like going into no man's land. So I have no measure on where to go on a day trade. VVIX is tanking. That's great. Let's go. Bad for NVIDIA, good for AMD. Yeah, it's exactly. So today we start, especially nice to 7825. Yeah, that's probably it. Is there a playback for 3 p.m. class? We do. We upload them all. Just my video editor is behind because of the holidays. So she needs to finish editing one of them. And then I'm gonna post a lot of the rest of the 20. So today we start over with course number 1. Everybody, go here. Hold on. Look. So bull market today looking good, but I'm not sure that we passed that 331 and keep going. Something inside of me has me worried about this market, but I have no place to short from. Okay, so in the classic Matt sense, everybody click that link. Go read the reviews about our course. You want to see how since we opened it up back in August, nothing but 5-star reviews, and people say it's game-changing, mind-blowing, the best thing they've ever seen by a landslide. Nothing even comes close, stuff like that. It's not, as people aren't made to say, those are actual customers. You can read everything they said and why they love our course so much. Position management and risk management is a course on that. It's a course on how to bet like a pro. You guys watch me wait for 3 weeks, then strike it for a 40K profit in a single day. How do I not lose money? Like, How am I not out there hemorrhaging money, day trading all left and right? These are the questions that people ask, and we try to answer that. There's strategies on where to appropriately sit out on the market. Not every day is a trading day. Not every day is an exciting day. It's not exciting to go out there and try to make money every day. If you think that that's the case, the person you watch on YouTube is not showing you how much they blow up. That's it. You might think the big sim payouts, everyone that's doing sim funded payouts, all this stuff left and right, it's not a person that's making money trading. On the surface, it may look like it. They may get paid to influence, like these prop firms hire people and pay them monthly salaries. Prop firms tell them, you know, be flashy about it, yada, yada, buy expensive stuff. It's all done. We call trader porn to like bait you into the whole system. We're the real traders here. Like, I'll tell you, you guys name a trader out there on YouTube or a trader out there on Twitter, I'll literally trade circles around any of them. Real trading to make real money from trading, that's not what it is by far. Hi, Doc. What's up? Hey, we thought you died. Like, I literally went downstairs and I poked you with a stick and you weren't moving. I thought about calling an ambulance, but I figured I'd just get him to haul you away when it started smelling bad. I was like, move. I was like, oh, I think she's dead. I was like, she'll start smelling bad in a couple of days, so deal with it then. I got to stream. We all wish you well, iDoc. Poor girl. She got worse than I did. So much worse. You took the fever reducer? That's good. She's like burning up, like seriously burning up. It's really bad. I didn't have a big fever though. Hey, Pickle didn't poop, by the way. He was being stubborn today. Our question is, do we press the yellow line, keep going? I don't have a gauge. This is the major pivot today, or does it reverse? So one of the things that I do not do is when you have an event that creates a catalyst, back this pink line, I usually don't trade. We have a rule that's like no trading outside of catalyst. I did try to take a long, and that was the correct setup. But like I said, I put micros on, and when it started selling, I just scared myself out of it. So no trade today. Oh, he pooped. Dude, dog pissed in the bed last night. I was so mad. I was so mad at him. We're potty training our puppy. Okay. So I usually don't have much of a guide outside of here, unfortunately. Rest of the market looks good. Nothing else looks bad. Like everything looks good today. The problem is it's just hard to trade because I have no gauge or guide. But looks like my long setup from here was the correct one, and I don't have anywhere for it to go to. So I wouldn't know where to exit my trade. So usually when I don't have a good exit target, I kind of just get out of it. It's kind of some part. Who pooped the bed? Who really peed the bed? Listen, guys, don't blow my cover, okay? It's okay to pee your pants in your 40s. Come on now. So looks like the upside trade is winning. Honestly, if I took a long here, I would exit right back at testing double tops. I don't have a good gauge as to where it goes. This white line goes from open to next resistance. We don't know where the next resistance is. I would be very cautious trading this environment. I'd take little scalps to long side. And 331 is that next resistance. So like the trade was really small anyways. From here, I'd kind of like peeing your pants is the coolest. If peeing your pants is cool, then consider me Miles Davis. Oh my God, that's the grossest thing I've ever heard. Everyone on the bus. Let's go. I used to like literally annoy the shit out of everybody with how much I quoted Billy Madison when I was a kid. Billy likes to drink soda. Miss Lippy's car is green. Risk intervals are a great target. Yeah. Nice bull update today. I do like it. Now, I just have this hunch, and I don't know why. While the market, all signs are saying to be bullish, market's looking at, I just have this hunch. And I don't know what it is. And I'm not shorting this at all, but I have a hunch that this market wants, from what it's done lately, unless the market's changed its mind today, which I think it has, that it wants to do that. Now, I'm not shorting it at all. It's just I'm avoiding longing it because I don't want to take any risk. I had a huge update yesterday, so I'm not really going to come here and kind of risk any of that. Shouldn't there be a type of group for traders that stream live? Oh, yeah. No. Nobody that streams live, with the exception of me and maybe a couple of people I know, has ever showed continuous profiting. No, but I'm telling you, name a YouTuber right now, they do not make money trading. Not a single one of them. Zero. None of them. The big ones, none of them make money trading. None of them. And I'm not making that up. They don't make a dime. They make money promoting, which is what it is. They're not traders. There's a whole tactic that the guys use to make it seem like they make more than they do, and they get away with it legally because it's all paper trading. It's all sim accounts. So it's like there's no regulation for that. You're showing a sim account, and then you're like, yeah, it's a sim to funded account. But like, you know, there's nobody trading a real trading account that's showing you like continuous brokerage statements, right? We've done it enough here over the years. I mean, we have years and years and years and years and years of just live trading a single futures account with account numbers shown, posting the statement, posting the history. And the only reason we jumped to the bandwagon is because the bandwagon, everybody's there. So we had to kind of be relevant. But I'm not naming names, but anybody out there, any of the big traders, they making, no. They're out there crushing it. They're not millionaire traders. They're millionaires. They're millionaire salesmen. But that's the state of the game. I know the game. I know the CEOs that tell me how much they pay these people. I know everything. You name someone out there, I know the salary they get from Apex. Believe it or not, I know everything. I don't name names to be under the bus. I'm letting you know. If you're trying to learn, it's great to watch people because I love watching all these tons of people. I love watching tons of friends, you know. I wouldn't learn anything from them. I like them. I love hanging out with them. They're nice people. They're not terrible, but they're certainly not to the level they should be teaching anything. Yeah. Somebody said Alpine. I don't know who Alpine is. Some people I don't know. So there are some good people out there. But as far as like the Simfluencer world, it's all about, you know, essentially paper traders just trading 20 accounts left and right, maybe make a payout every once in a while, but the amount they spend on the evals is like 10 times as much as they make. Hit that like button, let's go. Some get offended if you ask for proof. Oh, if that's it. Like if they get offended, you ask for proof. That's it. That's your answer. You know what I mean? Yeah, you ask for proof, they get angry, they threaten you, they talk crap about you, they try to sue you. It's all kind of there's a whole art form in the trading influencer world to cover your tracks. There's like I've seen everyone do every single trick. I know every trick in the book. I've seen them do it all. So when I would stream my normal account, we had a thing where I was like, let me take 5K to 100K sort of thing. And I would show the account balance. I'd show the stats every day. I do the update every day. And as fun and cool as that is, the influencers get all the traction. So it's kind of like, if you're not doing trader funding programs, nobody's going to be interested in your stream. People are like, how come you're not making, you know, $100,000 days in your Apex account? How come you're just making $4,000 in your main futures account? It's not like it's only trade one account. You know, it's like, and people are like, I mean, you know, so-and-so makes more. I'm like, no, so-and-so doesn't make more. So-and-so makes a big payout, but then it probably costs them like 100K worth of blown evals to get that payout. And then taxes and all that stuff. They're not really netting money at the end of the day, which means you shouldn't be mirroring what you see as something you should do. The trader funding programs, I support them. I think they're a great practice environment. But the scam they all propagate is the telling you that you need to buy 10, 20, 30 accounts and then making them 80, 90% off. It's all a scam. It's designed to make you blow up faster. They tell us influencers, you trade your 20 accounts. Why? So what Dakota said this morning when he quoted me, why not take their one good trader who's in a live account and promote them? Because they want to sell you the same account 20 times. Here's the rule. Okay, ready? Mind-blowing moment. Buy the account for $100. That's it. Buy one fake account for $100 and trade it and get funded. Or let's make it 90% off and make them $10 a piece. So it's a fake thing that we made 90% off. And we told some guy to tell you to buy 20 of them. You took that $100 account and you just now pay $200 for it. Because 20 fake accounts is one fake account. It's all fake. The whole 90% off thing is a way to get you, who just now realized that you are an idiot, no offense, just pay double for the same fucking thing. Because you saw some dude trading 20 of them. The fact that you're allowed to tether them together means you blow them up even faster. So the joke's on them. I just got one account. So if I was not doing the stream, I would only be, yeah. If I didn't make a little money, the affiliate side, that goes right back to the developing the trading platform. No, if I wasn't in front of an audience, I wouldn't touch them with a 10-foot pole. Absolutely. And I would do as much as I can. I would use them as an avenue to practice if I was new, which is what they're good for. I'd use them as an avenue to make money if I blew up, just start over. But as far as like real trading, I'd advance through the ranks, make the money, and then trade on my own every single time. Because why split the money? And so they're not bad programs. They're great programs. It's not them that's bad. It's the influencers that are the scam, not the programs. Like ETF, they don't tell me, Matt, we need you to show 20 accounts. They don't tell me anything. But there are programs out there that tell their influencers, I need you to trade 20 accounts. We're not going to promote you to live, even though you're making a whole lot of money. We're going to keep you in your 20 sim accounts because they want you to see them do that. ETF doesn't do that. They've got integrity. That's why I like them. I'm not pointing fingers at the firms that do that. But why, you got to ask yourself, like Dakota said yesterday, why are certain firms not promoting their big winning traders to a live account? Because like I said, it's not flashy. How are they going to sell you 20 accounts if this person's in a live account? Think about it like that. A business using marketing to get you to buy more of their product. Well, especially if the business is gambling and they're showing off how easy it is to make money gambling, right? You know, it'd be great to sell my product. Let me pay somebody $300,000 a month. That way they can go buy Rolexes with it and private jets with it and take pictures with it. And then tell them they can still trade. When anybody that makes that much money will get promoted, but they tell them still trade the sim accounts. That way you go buy 20 of them and blow up. They're essentially teaching you that what this person has is attainable. They entice them with enough money to show off with. And then all of a sudden you are baited into a world that you can't win, into a carnival game you can't pass. And these people tell them, hey, sell courses, do this, teach them what you do. Some of them say write books. Some of them say they literally tell their influencers what to do. They even fund them to do it. I'm not telling you what I know. I'm just telling you I know stuff. And all the while, the entire thing is lubricating you to buy more sim accounts. See, I know people and I know things. There's one benefit of being in the position I'm in, is you collect information. The last thing I do is start beef with anybody. But for the sake of you guys knowing the whole 20 account at 10% off or 90% off thing being promoted. Now, if you're like ETF, I was really, really, really good. They promoted me to live, right? One account is not that flashy. You say, oh, I made $5,000 in one account. You know, it's not going to really be a good commercial. But if I said I made $4,000 in 20 accounts, right? That draws a crowd. And if they were like, we're going to pay you $200,000 a month to keep doing it, you know. I've never wanted to trade for firms. I've never wanted to trade for. I've never wanted to work for anybody. Like I only have one job in my life that I truly loved. That wasn't my engineering job. I worked in a plant. It was delivering pizzas when I was a kid. Other than that, it's like, I don't want to sit. I don't care how much money anyone pays me, unless it's like $50 million, and I'll do it for a year. I'll stomach it. Like I would never want to get up. And a lot of Wall Street firms, a lot of traders out there, it's not as good as you think. They're not like kids out there out of college making millions a year. You know, your average, you know, floor trader at a firm, they make a couple $100,000 if they're really, really good. Right out the door. You know, they're not giving good assets. They're not trading prime stuff. So it's really hard to get the big boy trader job anyways. Even so, I wouldn't want to like drive to work and sit in traffic and stuff. It's a good, nice bull market today. So like no shorting, no fading. I think we're still going to go up. This is my upper target, and I don't really trade out beyond that, but it looks good. You work on the buy side to make the roll band. Yeah. So everything's bullish. All three signs are bullish now. There was an old guy you would see trading, scalping, claiming to make 30, 40K daily. He blocks the clocks. You can't see it's a paper trading account. He doesn't sell courses, so it's a bit weird. I'll answer your question. He doesn't sell courses yet. Nobody out there builds a following for any other reason other than they're monetizing it somehow. There's no reason to waste your time trading in the public eye and going through all that effort if you're not trying to turn it into something. Like, why would you start a restaurant and eat away the food? Ain't selling courses yet. Well, he got something. He's building something. Okay, nice, beautiful setup. So IWM looking good, SPY looking good. I just don't trade on big burp ups like this. I'm always a little kind of skittish when catalysts are active. Isaac Fletcher, yeah, you got it. So today we start our courses all the way over. This is the best thing that we teach. It's $1 a course. And like I said, we didn't make it $400 to buy the course, you know, $1,000 to buy the course. It's $1 a course because we're kind of like, fuck you, the establishment of people selling, you know, ridiculous courses at ridiculous prices. And it's like, you know, $1 a day. So I want everybody to sign up for this. This is by far, and I tell you, if you don't like the course, 100% refund in 3 days. And nobody asked for a refund. So go here and check it out. We start today in this 20 days webinar. So every day for 20 days is a boot camp. We used to not sell it. It used to be part of our membership. If you're part of literally $1 a class, that's it. That's the link. If you had a membership to the Rocket Scooter platform or you like subscribe to the platform, it was free. If you were in like the subscription, now that's like, now it's been reduced to $150 a month as a special we're doing. Oh yeah, so we're doing some specials. Let me tell you what we do. I'm the guy that made the Rocket Scooter trading platform, by the way. We're our own trading platform that focuses on risk management, identifying market makers and options flow. Helpful to a futures trader to the endless degree. It's another layer of the market you didn't know. You didn't know that you can use QQQ options to find pivots in NASDAQ futures. Welcome to the future of your understanding of stock market. Everything's tied together. We found a way to find extra pivots in NASDAQ and S&P and other things based on where options are distributed. Okay. You know, it's out today. I'm not shorting the market. I'm just kind of afraid to long it. So if you look at this, what we do, if the platform comes with all of these tools they're all automated. So essentially the structure points and futures, those numbers I was showing you this morning. Liquidity map is automatically populated. It shows you the flow path. As you see right here, anything above orange pushes up. Anything above orange pushes up. There's a different map under different circumstances and conditions. Today's map is up. Notice how I'm not saying let's fade this. I'm saying the market's going up. And I tried the long on the gap and go. I just scared myself out of it and took $500 loss. No big whoop, right? But I was right. My entry was just garbage. And when you lose MHP, though, actually not garbage. When you lose MHP, it's good. Better safe than sorry because it could have fallen the blue. But it did recover. I should have jumped back in. I just didn't want to because my exit target was nearby. So the risk to reward was kind of like 1-to-1. Somebody says the class is worth its weight in gold. Well, thank you. So 20 days, what we do is we teach you at the start of the 20 days class, we teach you a trading strategy that doesn't fail. We actually start off with the class giving you a hypothetical trading strategy that wins. And it involves randomly trading. There's not even an indicator that goes with it. You actually randomly trade at a certain time, or sorry, random time. And under the certain conditions, that strategy wins over time. And a lot of people use something similar to that. I can tell you what it is and spoil the surprise, but it's not an applicable strategy that you're going to do. Classes are at 3:30 Eastern, and they're about an hour apiece every day. It's a boot camp. We train you all the way from start to finish on risk management, position management, when to sit out, when to apply your rules, when to apply our rules, when to find high volume pivots. So what we master here is how to find volume in the market. We can predict volume with our pivots. That's the first time you guys have heard somebody say they can predict volume. Most people are trying to predict price. We set up by telling you price is pretty much random. But if you can find where volume is, you can make bets only where traders are going to be where it matters. And that's kind of what our goal is here. The reason this yellow line is important, and calculate this November the 4th, there's the first pivot after the event where the market's resisting. There's a reason that these are important. And most all of our stuff are actually based off of mechanical exploits of the actual exchange. So we're like reverse engineering how the Globex works and giving you just like pivots from that. We're not using price action, any of that, so it's completely different. The platform is, so we have a special going on right now. So the platform normally is $199 a month for the platform. It's indicator. There's Discord and all that stuff. Comes with all the tools, all the information, all the stuff you need. But right now there's a half price off, and then if you lock that in, it's $159 a month instead of $199. So $40 off forever, and you can lock it in. So everybody's like rushing to get that deal. People are paying $199 a month for this. You can all go to $159 a month if you jump in literally now and sign right back up. So the goal here is to give you a different layer of the market you didn't see, not price action indicators. It's all arbitrage and volume predictions. So volume prediction, right? These little indicators here that are automatically printed on a chart, we have them for anything that has options. If I'm trading NASDAQ futures, I'm going to be looking at QQQ. If I'm trading S&P futures, I'll be looking at SPY. SPY has high volume pivot at this orange line every single time. And so the map shows me the flow is actually resistance off of it, which is why I was trying to long today, which was the right answer. I just scared myself out of the entry when it fell. As you see, it's following the flow path. More days than not, it follows the flow path. The structure of options forces people to buy more shares and more futures. It's a neat thing that we do here. It's different. We record all the classes and you can watch them after the fact. Today we started at class 1. We start off with the unbeatable trading strategy, the one that's never lost in the history of the stock market. And then we state, but price is random and you can't predict the stock market. So how is there a strategy that works when you can't predict the stock market? It doesn't make sense. And so we teach you like a mathematical boundary, like a hypothetical, right? Then we build a real strategy off of it. Each class builds on the last one. By the time you're at the end of the class, we had a poll yesterday and I asked people, did the class do anything for you? Like what was something that you could say that the class is, and everybody here that's been through the class at least one time, don't spoil the secret. The surprise is amazing. Like this is like a transformational event, like a thing that reshapes how you think. What is the one thing you took away from our boot camp that you've applied in your own life and trading? Like one personal thing. What's my favorite setup from liquidity maps? Okay. There's 2 of them. My favorite setup is BSU bull zone bottom right here. They call this a Matt's favorite trade, trading below blue but above bull zone. Yeah, so everybody tell me in one sentence, if you've taken the classes, what have you applied that's different and how's it helped you? Like your application, just so I know. I like listening to what you guys say. So anyways, the full platform is $99 first month, $150 after, but then the courses themselves, we started selling them individually at Black Friday because people are like, how do I take the courses? And I was like, well, just, give it a shot. We're like, let's make them $20. That's the amount that we pay for a book, like $20 at the bookstore, $1 a class. It's literally a 20-day boot camp for $20. It doesn't fund anything here. It doesn't make my Maserati payments. It just, it makes you take it seriously if you pay for something. Pay a little bit, $1 a class. And so from there, you can go through this entire boot camp. So what people are saying, people rarely short now. They only pretty much long now. Only longs has changed your trading life. Sit out on catalyst days. I'm sitting out on a catalyst day. I will use rocket zones. I'm looking for entry and longer term swings. It's been game changing. Long only, watch position size. Patience, not trading every session. Like water. I'm like water. flow either direction. It's like that Bruce Lee thing, be like water. If water isn't a pitcher, then water is a pitcher. If water is in a glass, then water is a glass. Be like water. Okay, my favorite setup is BSU bull's own bottom, which goes to the halfway point between blue and the bottom. This, by far, that when the DD ratio is greater than half is like a 90% probability setup. 90% of the time that trade works. Another 90% of the time setup is what everybody calls the EST trade, because Matt pounds his fist on the table, says every single time. Every single time I long from here to here. When this number on the screen is greater than half, it again is a 90% setup. It works 90% of the time. That's my bread and butter. That's my put money in my pocket trade. When those two trade setups happen, they, under bull conditions, is like 90%. So what you guys said, you trade off of pivots now, sit out a lot, only go long and place your stops at one risk interval, understanding you have 80, 90% edge. Transparency about pivots, confidence through DD bands, resilience. Chat GGB talks about like large option trades may not immediately translate into futures moves. What is your opinion? What? Lag and signal options markets. No. So that's not what we're looking at. We're looking at option structure. So let me teach you a little bit about options. Every single day at 9:30 in the morning, options market opens, okay? And then options market starts trading. At 4:15, which is 15 minutes after the stock market closes, option market closes as well. This is options. After market closes, everybody here reports their position to OPRA, which is the options reporting authority, okay? Oops, OPRA. OPRA then, in the middle of the evening, sends that report out to everyone in Wall Street. People like me and other big firms buy that information, and now we know. They give you the open interest of all options that exist. Like everybody has a position, that's it. So today we're going up, guys. I don't think we're fading out today, looking good. I don't trade in these, blast ups. I just kind of let it go. But the market is recovering, looking bullish. I love it. So Opera takes the data overnight and gives it to us. We have it overnight, and then at 9:30 in the morning, options open and start trading again. At any point between here and here, nobody knows the landscape of options because nobody knows the real-time open interest, not even the exchange. It's not known because options are traded off exchange, over the counter, whatever. And so you only get the data point once a night. That's it. And then at 9:30 in the morning, we do our calculation off of yesterday's options on that data point. So options markets, ChatGPT doesn't know anything, if that's what they're saying, are not always perfect predictors. They're 100% a perfect predictor because a call that's sold, let me example, at 580, if somebody sold a call below 580 and you bought the call and price goes into 580, this person is 100% guaranteed to buy shares, a certain amount. You don't know. Depends on how hedged they were. If they had 0 in their pocket, they have to buy 100 shares once that option has risk of going in the money. If they had 50 because they're delta hedging, then they got to buy 50. If they had 20, they had to buy 80. Very rarely is somebody going to sell a call and be 100% hedged the minute they do it. They're mostly going to be delta hedged, which means that every option that goes in the money is going to have some forced buying to go with it. And so there's no lag in it. It's the mechanic of how options work. If I pass through a strike zone, people are automatically going to long from there in the underlying assets. Typically, futures are used to hedge other positions in equities. So people that are long options against market makers that are selling them, and the market makers need to hedge their short risk, need to long something. Well, why not go long futures as a quick in and out instrument to hedge, because futures you pay less tax on and it's more liquid. You know what I'm saying? So if I need to quickly hedge a short trade I have with something long and it's only a day trade, why would I do that in equities and pay short-term capital gains tax? Why not futures and pay 60/40? So futures are absolutely used to hedge options exposure. Large options trades, as ChatGPT is mistaken, may not immediately translate into futures moves, and that is 100% correct. So ChatGPT is confused about the question, but that's because we pioneered something that's not something ChatGPT be familiar with, because what we're teaching, nobody else in the world does. We're the first to do something like this. So, right, if there's an options trade that takes place in real time, like when the market is open, that options trade may have nothing to do with futures. That's correct. But our stuff is taking the overnight landscape and showing you how the entirety of the landscape is structured when the market opens to give you that blast off power. So it's a whole different mindset. If there's a big SPY call order that is bought right now, it may not at all necessarily translate into anything. And ChatGPT is correct on that. Yep. Our class is recorded. Yes, they are. Recorded and posted in chat. So I don't take every move that I see in the market, even though I usually get the direction right, even when I choose to sit out. I don't think we're selling off today. I think we're moving up. I think it's a great setup to move up. I don't have a target to trade to, but there is no fear of this market going higher. That's for sure. Problem is, if I don't have risk and reward defined, I don't take a trade every time. $60.15 is the next target. That's the wrong one here. So on S&P 60.15. Here. Right up here. How many of my little every single time trades happen in a month? Oh God, in the bull markets, like, you know, when you're basically bullish or whatever, there are some times when that trade happened like 6-7 times a day. It's by far one of the best setups. ES showing divergence. You know, there's a reason that I statistically don't take this kind of a trade. Most of the time, you know, it's unpredictable. And what's neat is that the last thing I want to do is inch my way higher to some kind of level. And I mean, we might have this little run. I think it's going to do something like this today. And if I miss out, I miss out. Who cares? But, you know, essentially, this is the new support if we're bullish. So that's good. It'll probably tap something and then try to sell hard and then try to support at the same level. So usually when you see a big catalyst like this that moves back and creates a little divot right here, this is the new trend line low as this market goes up. So people out there trying to fade this today, they're going to be sorely beaten the hell up, I feel. Miss out on making money, miss out on losing money. These aren't the trades where lots of money are made. These are the trades that if you're wrong, lots of money is lost. So it's like, you know that it's going to be crazy, then might as well not risk anything. I take really solid scalps against pivots that matter when you watch me trade. Yeah, I mean, I have like close to an 80-something% win rate. So it's like, I just apply my strategy when it works. But usually you guys tune into the market because I get the direction right. Now we just kind of point in the right direction. Yep, so I risked $500 across all of my PA accounts. So that's cool, right? I don't have anything, I don't really have to say anything I did much. Today, you're gonna see on Twitter, let's do it, let's play a game. Let's go to Twitter, let's play a game, we'll call it Twitter, we'll say Twitter Guru feed. Let's go see, watch this, we're gonna play a game. I'm not calling anybody out, we're just gonna play a game. We're gonna go through and find everybody that posted their 20 accounts that went up and whatever funded program they're in. Okay, ready? Let's go to Twitter feed and let's find people that are like, look how much money I made gambling on the catalyst for the event. Let's just go down. I don't know if anybody's actually posted any gains, but let's find someone. And I guarantee you the last event, they didn't post anything. People cherry pick. Anybody make any money today? Ain't even nobody posting any wins today. I don't see anything yet. Oh, they out there? There's some winners. Let's find some winners. Let's find somebody that gambled on this event. I don't see anything here. My feed is full of like actual informational stuff. Here we go. All positions from the PR have been closed. Time to call it a day. Look at all the money I made. Okay, now let's see When was the last event? Let's see. Was it PPI yesterday? I like Stockman. Stockman's a cool guy. I'm not busting his balls. But you know what I'm saying? Where's January 14th, right? Where's PPI yesterday? They're not there. Love you, Stockman. Not calling you out. I love you. But I'm saying, this is for you guys. When you read your feeds, just be careful. There's obviously like what happened yesterday's event, right? People love to put a spotlight on their fucking dice rolls when they roll the dice, right? I have to let you know there is no specific indicator you can use that could predict the direction of the market. You just guessing. It's not worth celebrating. It's not worth you guys being impressed over. Like I say, I love some of these people. I'm not calling them out. What's more like you? I don't see a lot of posts here. 10, 15 points is all you really need. Yeah, that's all I really need to make 30, 40K a month. I mean, a day. If I'm trading Apex accounts or whatever. I don't see any more posts. But the point I was trying to make was that people that did well today probably didn't do well yesterday. So just like, you as a trader, just be cautious. Looks like not a lot of people on my feed really rolled the dice the right way in CPI. Catalyst is active, Punch-On, so I don't usually trade when a catalyst is active. That's just my rule. The market moves on a risk interval, I don't really do much. The upside ones, I'm a little more lenient. I might try to look for longs, but that's it. Better safe than sorry. When you move a risk interval on an event, CAT is active. And you guys know me, I don't trade when CAT is active. Even upside CATs is very rare. I need a support to trade off of. And I thought about longing on MHP small position, and it was the right trade. It's just that when I got in and that happened, I scared myself out of the trade. And I don't have another, I don't know where we can go. I don't have another resistance target nearby. So the R&R was just going to trade essentially, back up to highs. I had really no good plan on this. You know what I'm saying? You close your long 1 minute for CPI, but you're cool with it where you're up 20 points. Mr. Clutch knows it. It's like, you can't ever say, oh crap, I missed out. Like, I make all of my money on 10 and 15 point moves in the S&P, off 50 point moves in NASDAQ. I make more money in a week than a lot of people do in a year sometimes in day traders, like new day traders. Sometimes I have such stellar weeks, and it's just because I wait for this perfect setup to go. I don't go out there and gamble every day. I don't have time for that. Now, of course, I have losing months and losing days and losing weeks. The downside market, I took a hit in my ETF account. So I'm being very cautious with that one to wait for the market to stabilize to get back into it. Yeah, and I was primed for like a 20K payout with that too. But, crash market sells off, avoid it as much as you can to not lose a lot of money. It's kind of the rule. You take news trades on practice accounts just to get the gambling out of the way. That's the way to do it. As long as you get the itch done, Yep. Is Rocket Scooter hiring? What do you do? We could be hiring. What do you like to do? 6 contracts, ES 10 points is 1 million a year trading. People don't understand that. People think that day trading is about getting the direction right. And I'm just saying is like, just be careful with the people that are like, here's the gamble I made on, here's the amazing trade I made by my course today. If you roll the dice long for every person that got long right, everyone else got short wrong. And you tend to have flip-floppy days. If your person's consistent, they be making money every day. But if you're trading the news, we just know, we teach you in the classes, the news is a gamble, and you're gambling. And right here, the exhaustion point after the news, the market is likely to test some lows before it starts to move. It's not likely going to reverse on a V. Today's likely to stay high. It's likely not to sell off. What the heck? Hold on. Hello? You get these weird, the scammer phone calls have gotten so weird lately. It'll say like Memorial Hermann Hospital. And I pick it up thinking that it's, you know, something serious. I get worried. I'm like, who's calling me from the hospital? My heart skips a beat. They're like, hello, sir. Would you like to, you know, would you like to borrow capital for your business? And I'm just like, oh my God. You know, it's just like the fact that they spoof it to make it look like it's from a hospital. Goodness gracious. Goodness gracious. Today's an uptrend day. It sure is. Sure is an uptrend day. Catalyst active. You know me. I don't scalp inside of here. I wait. I'm waiting for good opportunities. But it's good to see if the market stabilizes. We got a nice little low that's formed right here, which is good. I usually only trade a yellow line and I call it a day. I don't trade beyond that. And this is likely the reason for that. But I don't, like I said, I'm not trying to be like, I caught the bottom. Like, trust me, if the market's rallying, which it likely is now, tomorrow will be a nice, good up trading day and I'm going to be back to hitting it long. All of our greater market indicators, ready? This is this indicator set you guys want to learn. The greater market. The greater market will tell you everything you need to know about the market you're in, okay? It takes like 1 minute to learn this. Number one, this is percent market cap of the stocks. You call it the DD ratio. If it's greater than half, it means the stocks right now are all structured bullish. Meaning that stocks are trading in what's called a bull zone. More on that later. But it means that the stocks are getting a bit of long share hedging rather than short share hedging in abundance. So the majority of stocks are getting long share hedge. People are long in a hedge against it. Okay, against sold options. So the stocks are just floating higher. You'll see like, and this is market cap weighted. So 87%, the majority of stocks are bullish. Like let's load up some big ones. NVIDIA trading in a bull zone, right? It's getting long hedging. Amazon, I'm just gonna pop up some of the majors. Amazon trading in a bull zone with long hedging. You can see the liquidity map pushing higher, pushing higher. I don't know, Apple. What we've made is very, very cool. When people aren't out there getting paid to say this is revolutionary. It's a completely different way to look at the market. Why did it freeze on Apple? Whatever, Microsoft. Like I said, we made something pretty cool. It looks like my platform is. I'll show you in just a second. Apple here. Apple trading mean reversion. Okay, so Apple's neither. What happened here? There's my futures back on there. Meta, bull zone, right? So present your market cap that is in a bull zone. It's just going to get positive hedging. Look, Meta pushing up from blue, pushing up from blue. So the stocks are bullish, and therefore the index is likely to follow suit and also move higher. Okay, your greater market index. This is if you're an ES trader or a NASDAQ trader. This is the most important set of indicators you have to understand what kind of market we're in. So this is telling you the stocks that they track are bullish. It's really good. 87%, perfect. Number two, you're looking at SPY. If you're an ES trader or NASDAQ trader, you see that SPY is greater than this little orange line that's on its map as well. So I click on SPY. That's it. Trading futures, you need to know, is SPY above its orange line? Check. Good. This is gamma hedging on monthly scale, which ends in a week. Monthly options expire. This is the 1 month outlook. Hedging is more long than short on SPY. So left on its own accord, SPY is just going to get long shares against all those monthly options based on the hedging. So the pressure is just slightly higher to the upside, which is why it's slightly higher to the upside. The event blasted us here and it bounced on that little place where the air is blowing it. So SPY on the 1 month outlook, which ends on monthly expiration, is long. So this is for the rest of next week. It's not bad. Number three is the 3 month scale. We call it monthly map, and this is the game changer. This is the thing that people like eyes open when they say this. I can look at SPY and I can tell you what the futures are going to do 3 months out, or what they're structured to do 3 months out. Sorry. Let me preempt this. Nobody can predict the stock market. But I can show you how things are going to change in the next 3 months. This is a repair of the bear market. I'm going to give you a guide sheet that's going to show you this. As everybody sees the monthly maps, the clamoring today is just incredible. How excited people are that the market is back to being fully bullish. The market's fully bullish today, guys. By the way, the sell-off is done. It's reversing. I'm about to make my big tweet today. This is the point where it reverses. I thought I was going to take a whole nother week, but we're back. Okay, so on the cheat sheets, let me show you something cool. You want to get a month ahead of your futures, a month ahead of your stocks, whatever. The monthly map is showing you how the structure of options risk changes over time. It may not sound like something you need as a futures trader. It is by far the best fundamental indicator that you have, not fundamentals, but like structure indicator that you have to paint a picture of the market. You ask yourself, where are you currently trading? And right now it's trading in a dark gray. So right now we are in a bull market again over time. So this is looking all the way out until the end of April. This is April. So what does the market look like in April? You ever wanted something like this in your tool bag? So if the bottom of these dark gray is sloping down, just take my word for it, which it is, then bulls are longing more and accumulating more over that amount of time. So through February, bulls are back to buying the dip. That's wonderful. If the top of the light gray is sloping down, bears are exiting positions. Look at this little cheat sheet that we give you. And as you see, bears are exiting positions. It doesn't get any cleaner than this. The last part is the volatility going to change. If the space between these is shrinking, then your volatility is decreasing, which it's definitely shrinking. So, ladies and gentlemen, the bull market is back, which is great. I might make my little told you so tweet like bull market is back, but all three of the greater market indicators are bullish again, and it's good to see that monthly map is bullish. So a lot of your guru types out here today are going to be trying to fade this. I'm trying to long even at the high, and I didn't take it, but it's going to go higher. Maybe not today, but if it does dip, I'm back to long. What I'd love to see happen today is for this market to like try to fade, and I'm back to longing it. Okay. So this is today's stocks. This is 1 month out on SPY. This is monthly map that shows for the next 3 months is bullish. All greater market signals in Rocket Scooter are bullish. The stocks, SPY itself on the monthly maps for 3 months. Everything has lined up bullish again today. The bull market's back. Did I discontinue the Zoom calls? Yeah, I did. I absolutely did. In the morning. We still do Zoom calls in the afternoon though, but we don't do the morning Zoom call anymore. And for a very petty reason. Only on YouTube, yeah. We asked everybody to click the little thumbs up button on YouTube, even when they went to the Zoom call. And we got like 20% participation, so then I just canceled it. People didn't want to do 5 seconds of work for the 2-hour convenience of no delay. I don't know. And like I said, I tell people, this is Wall Street, not Sesame Street. I'm an educator. I'm like a drill sergeant. In the real world, I'd be screaming at you to do push-ups if you're doing stupid shit while I watch you trade. But in this particular sense, if you can't discipline yourself to click a button on a YouTube channel, then I need to cancel any perks I give you that pat you on the back and hold your hand because I'm just walking to certain doom. That's what I tell people. I was like, nobody wanted to... I said, we're going to do this extra bonus for you guys if y'all help us out over here. But the community was actually more awesome. The community was split and we had 2 different conversations. People were like, what are they saying in Zoom? What are they saying here? It just became ultra annoying. And we were like, you know what? We have like 300 to 400 people in our YouTubes every morning that watch concurrently. Might as well not split them up. Oh, I know you do. But I told everybody, I was like, I'm going to cancel the Zoom in a month if y'all don't do it. And then people didn't do it. So it's like, okay. I know it's like, discipline is about waking up and doing small tasks repeatedly. And if there's one way to train, like my dog who pees on the bed, is he's going to be kennel trained. And he's only allowed to come out after he pees. He's going to learn that peeing gets him out of the kennel. So I'm not saying people are dogs. I'm saying that favors go both ways. I think it's just more like people don't have the desire to change. And so in a month, I'll bring it back. In a month, I'll bring it back. And then people will have the desire to do it. That's what I say. See, the reason why people say the classes that we teach are like game-changing, mind-blowing, it's not just what we teach, it's how we do it. We make sure we discipline and shape you. It's like a Tony Robbins seminar. We completely change the way you think and we change how you behave. It's a behavioral class as much as it's a trading class. Like I say, I smile when I say this. There's no class that comes even close to the experience you have with ours in trading. So we make sure people get on page. So in a month, I'm going to bring the Zoom calls back. In a month. In the mornings. And I'm sure it'll be like that. The one thing you can't do in trading is allow people you're training to get lazy or get complacent, because that's when their guard is down. If your guard is down, the market kills you and you lose all your money. So what I'm actually doing by canceling the Zoom call is preventing people from becoming lazy. And when you're lazy, you'll lose your life savings. You have to be alert. You have to be on fire. You have to wake up. This is what I got to do. A, B, C, D, E. And we kind of like test people and give them a repeated task. One of the things I teach you every single morning, if you need to change your training discipline, you need to add some kind of discipline in your life. Find one repeatable task you haven't done and commit to doing it, rain or shine. And I say people, the best thing to do to test your ability to have discipline is to, well, number one, when you open up Zoom, obviously open up YouTube on another screen and click the like button and leave one comment, which gets the bots turning on. That's kind of what happens. The bot waits for a certain amount of comments. And so I set that bot to post after a certain amount of comments just to see how many comments we would get. And it took the amount of time as time went by. I made a plot in Excel. The amount of time as time went by for those amount of comments. I'm sorry. This is time. The threshold of comments actually went up. While the stream numbers went up, even with more people in the stream, it was taking longer and longer and longer for those bots that are posting to start posting. So I came to the conclusion, and then we made a decision that says, the more people you have in a group, the lazier the collective is, the less motivated the group is, the bigger the group. So because of the math, the thing is we do the math of that. And so I said, because of this, we need to, shake the group up a little bit. So what you need to do is one act of discipline. And this is what everybody needs to do. And I tell you, this is the one thing that works. If you need to change your trading discipline, you need to learn how to commit to one small behavioral change and then commit to it no matter what. And the trick is you take a shopping cart back to where it goes after you go grocery shopping. And this is why. You're doing a good task, a good deed for someone else. And, it's not like it's something that you have to do. But if you don't do it, you're kind of a dick. If you do it, you're kind of a good person, but nobody comes around and pats you on the back and gives you a reward for it. You're kind of just doing the right thing because it's the right thing to do. And it's the same thing as like using your blinker every time you change lanes. So these are the two things you do. If you don't do that, please do that. You're saving people's lives. You might even know it. And returning a shopping cart might also save somebody's life because, somebody could be running out to grab one in the middle of the parking lot and get hit by a car. Who knows? But you're kind of doing the right thing. And the idea is that sometimes it's going to be raining. Sometimes it's going to be cold. Sometimes you're going to have to walk really far, and it's going to be mildly inconvenient and somewhat annoying almost every time you have to do it. And it's like 5 seconds out of your day. And if just one time you go, you know what, I'll do it next time, then you're a fucking failure at trading, and you're probably a failure at life because it's a failure's mentality. That's not discipline. I don't know. Maybe it's just too cold today. No, take it when it's cold. Take it when it's raining. If there's lightning strikes, time yourself and take it in between the lightning strikes. Find something that you do that's mildly annoying and force yourself to do it under all circumstances, and your trading will start getting better because you'll start applying yourself with discipline the same way. You won't ever cheat your rules a little bit. You know what? Maybe today, it's going up. I'm missing out. No, okay, I shouldn't do it. Okay, whatever. I'm in. I'm doing it, right? And then you long, and then you lose all your money. But it's usually the one decision you make that makes your trading account that had a month of gains lose all of it in a single day. And that is all of you in this. And I'm going to get some amens right now in chat, but this is all of you in chat. It's that one stupid decision. I wish I would have not even traded today. Because what you did is you skirted on your discipline one time. And so we tell you to find one piece of behavior that you can do that you do under all circumstances, no matter what. One thing. And so the shopping cart thing is because you're going to be battling the weather sometimes. It's going to be too cold and it's going to be raining. Do it in the rain. Be proud of yourself. I picked something to do and I'm doing something good and I'm still doing it when it's raining or when it's snowing, when it's cold. I'm not making an excuse to not be disciplined. Because if you can't do something like that, how do you think you're going to come out here and do the hardest fucking job on the planet and make money against other traders like me who are absolutely face rolling you in the market because I'm so fucking talented at this and you're not? I'm taking your money from your pocket and putting it into mine from every time I'm winning and you're losing. So think about it like that. How are you going to walk into the stock market and beat me if you can't return a shopping cart to where it goes? Not to say me is in general, but me, and there's a billion traders even better than me. They're taking your money and putting it in their pocket because you can't discipline yourself. So start somewhere is what we tell people. And as a test is that if we actually study our group, and if our group is being complacent, we have to change something so that people don't go out there and blow up their trading accounts and then they go say, well, Rocket Scooter isn't any good. It's the reason. I don't have a single person in those reviews blaming us for their bad decisions. You know why? Because we teach you how to make good decisions. There's 5-star reviews for a reason. Spit and fire? Oh, yeah. I know how to discipline people, especially in trading. And you see me, I don't skirt my rules. I just shout on all you guys. I know I hate that I have to do that. But it's like a drill sergeant. I do it out of love, you know. It's like for your own good, for everyone's own good, I had to cancel the Zoom call. Because the secret test is the Zoom calls got bigger and bigger. Our membership like doubles in size, you know, this last year. The percent of participation went down even lower. So it means there's no accountability within. And so we can't have an aura of cheating rules or not being consistent bleed over into what's happening, right? So what happens is we say we're canceling it for good. And then I tell you today, okay, actually for a month, I'll turn it back on. And then when we turn it back on, somehow magically everyone's disciplined and everybody's likely going to trade better when they start becoming disciplined in general. And so you gotta herd the mentality into a disciplined atmosphere. Max on, max off. It's true. It's to make sure everyone's paying attention. And for your own good, I mean, people are like salty. Well, I paid for the Zoom calls. I'm like, well, you know what you should have done? What'd you do in those 5 seconds? Well, I clicked the like button. Yeah, would you tell other people to do it? No. Well, even more discipline. Think a little outside the box. Remember, we run as a team here. And there's a reason people say this is the best trading class they ever had, because the majority of it is behavioral stuff. And we make sure that you are consistent with your approach. Now today, greater market signals are all bullish, okay? Don't forget to sub to the channel because we do all kind of fun stuff. We do trader funding giveaways. We have codes for Tradeify. We have codes for Elite Trader Funding. We have codes for Apex. Use our codes. We do all kind of discounts and drawings if you guys buy stuff from them. Yeah, so today, bull market is back. Bull market is back, baby. This is so exciting to see. The bull market is back, which means tonight's trading is going to be lovely. If we kill that volatility, we're good. We're so good. It's not even funny. Now, SPY is good. So the S&P is good. Let's double check NASDAQ before I go out there and make the tweet. NASDAQ has still got a little bit of bear resistance, but that kind of whittles away. So there's a little bear resistance in the mix that ends at the end of February. But other than that, NASDAQ is back. Oh, this is so nice. This is so good. Watch me tweet it, and then it sells off today, and then tomorrow it rallies. Okay, but I don't think we're gonna sell off. Oh, it's so nice. It's so nice. I have to do my tweet. This could be the starting point going back to highs. Now I like it. Yeah, so we're good. We're definitely good. Let me make it big. That was pretty quick. Apparently, you know, the lowering CPI is good. Like I said, all market data is good. All economic data is good. Job growth is there. Companies are hiring people. Unemployment's coming down. Or sorry, unemployment, or I guess not coming down, but not going up. GDP is good. The bull market's back. Bull market's back. The bull market's back. Why do I have 19 notifications? Who's notifying? You reference to what are people talking about? Somebody asked for references November 4th when I marked the chart. Where I marked the chart. So we good. All right. It's good to see the bull market is back. Now, I'm not necessarily like going to chase a high, but any flushes, any dips. The market's still have volatility, so there could be a dip or two between now and the next week. So all of your gurus are quiet today. They lost money shorting this shit. Where's all the payouts? 20 accounts. Where's all that money you made? Crickets, crickets. Where's all your gurus making that money? How come none of them showed the gains? Cause they all shorted and they all blew up and they don't want you to see. God, my feet is so fucking quiet today. Oh my God. Where's all your gurus? Where's all the, well, they made all the money today. It's I find my voice back, so it feels kind of, where's all your gurus? Oh, I'm gonna kill myself if I scream in the microphone again. Y'all know I sang metal in a band, right? In my younger days. Wow! I'm gonna fuck up my throat though. Where's all the gurus and all their gains? Why is my feed so quiet? I thought you made all millions of dollars flipping them coins on those news. Everybody's P&Ls today. I'm sad. I wanted to see some 20x Apex accounts, 10x Tradify, this and that. I want to see everybody's millions of gains. I'm thinking a lot of people are going to try to short this today. Can I do some voices? I used to sing metal in a band when I was in my 20s. Like I say, sometimes I surprise iDoc. I'll go out there and put on some metal in the car and start screaming, and she's like, she rolls her eyes, and I'm like, I still got it. So, Twitter's very quiet today. I'm like weirdly quiet today. Where are all the gurus and their fat stacks? And I hate the idea that I'm busting balls because a lot of these people are friends of mine. They follow me. I like busting balls. Let's see. Where's all the gurus and their fat stacks? Did everyone try to short today? I mean, this is the people I'm following. Okay, let's go to the algo for you. Oh. Futures farming. Futures farming. All right. I know who you are. 32 minutes. Banking, baby. You banked yesterday? At least they're transparent. I'm going to pat this one on the back. At least he's transparent. When he flipped the dice the wrong way, it went the wrong way. I applaud this one for showing you the loss. I actually have to say, pats on back, futures farming. Whoever you are, pats on back. Good. I like seeing somebody actually show the day they lost, which is good. That's what you should do if you're doing this on Twitter. Not be like, here's the 50K and here's not what I lost. All right, let's see. Where's all the fat stacks and the red days? I don't see anyone showing them. Where's all my gurus playing that Apex? How come none of you made the bank? I think Brian Stock posts this stuff a lot. I don't follow this guy, but check out all this money he made on today, the 15th of January, and he didn't post anything for the last couple days since his last big win a week ago. Buy this guy shit. Everyone buy his course because he posts his wins once a week. I'm sure he's good. Looks like he never loses. I'd buy his shit. All right. I'm sure he's good. But it's the marketing techniques. You know what I'm saying? Here's the big win. Here's the big win. And everybody's like, here's the big loss. You know, it's like, or maybe once a month or two, they're like, here's my big loss to appear transparent. But like, where's the, how come these people flipped the coin today when they didn't flip the coin yesterday? He had some strategy to sit out yesterday, I guess. I don't know. I'm saying he should post it. I'm making fun. I like these people. I'm not throwing shade. But I'm looking for the gurus and their big fat wins just to see if they posted the loss they had yesterday. What the heck? I don't see anything. So I'm proving a point. It's all about the marketing of these of the peeps. Lanto, there's another one. You know, going on my X feed so publicly, that's like the For You algorithmic feed. Who knows what kind of weird shit the algo is going to recommend, like weird pornos or something. Luckily, I don't get anything crazy. But like I said, I want to see somebody that I hate people want. My thing that I hate the most is somebody that wins today on this, and it's like, check out all I do. Come watch me. I'm good. When I won yesterday, I said I gambled. I literally flipped a coin with some micros. Or actually I flipped the coin in like 5 of my 20 accounts. And I even said that. I got lucky. But I'm trying to take credit for coin flipping. But I don't like, and I'm being nice. I love everybody. I don't like when the post is, here's all my big gains today on an event, when yesterday the event went the other way or whatever. And there's a lack of participation. Nobody is posting wins or losses here. They're magically quiet. And all of a sudden, look, I made the money today. I find it to be a little slightly misrepresentative. That's what I'm saying. So, if you're in Chicago, call to see me and ask for a tour. The trading floor had just a few guys on it. They weren't doing anything. I know it's all robots now that run this damn market. It's like your girlfriend getting a hold of your cell phone. Yeah. You know, I'm scared because like the algorithm on Twitter recommends stuff that even if you don't follow it, and somehow it like recommends, and I don't know why it does it, but every once in a while, like real like nasty stuff shows up, like fight videos that I don't know. I don't subscribe to anything that's not finance. So I don't know if these people subscribe to something and it recommends it for me because other people do. But I get like this one the other day, it was like real death or real something. And it was like showing like people getting shot and people getting hit by trains and stuff. And I was like, why are you showing me this? And I shouldn't be, yeah. The For You feed is like not something I should show on my YouTube. I might get banned if I actually recommend some kind of weird, nasty stuff on there. Everything's electric. Steam group will have your own very personal bot just for you soon. That'd be nice. Okay. So, like I said, just remember, event days are all coin flips. I make a name for myself not trading coin flips. I'm waiting to watch this bull market manifest. I'm not gonna miss out on anything. The bull market's back tomorrow. Is gonna be good eats on the trading. Ain't no fading of this, so I think we're good. Let's take a look. We have 2 impact lines today. Let me calculate some pivots though. Big run up. We have 2 IRL lines today. Yeah, I'm not throwing shade any of those peeps on there. They all seem like nice fellas. But like I said, a lot of people I feel like should step up the transparency, especially if your goal is to sell trader funding program accounts. Like I said, it's my whole thing this morning. These people get paid lots of money to show you the whole 20 account thing, to get you guys to compete and play in the casino. When I don't tell you how expensive it is to do that. Now, I think it's I believe people should be more transparent, but the For You feed is terrible. You coded your own blocker for it. I know. I think I wish I could do that. I wish I had the ability to do that. Okay. So today, I'm not going to lie. I'm a little like lacking in momentum is why I'm not trading this. As you see, people might say like, why is this guy not trading? What's he trying to do? All your gurus are quiet today and I'm not losing any money. I'm not doing much. We're barely moving 10 points from the open the market. That's why I know the market's going to trade like this. I didn't chase the high. I feel like I'm messing out. I'm not going to try to short this thing. It's going to fade. I'm going to wait. What I'd like to see happen today is I'd like to see the market try to sell. It could very well do this. Who knows? But at least try to sell and hit some of my stronger pivots down below. Today, here's a rule of thumb. If this orange is broken, it falls through blue like it's not even there. If, big if and only if. So those of you that are like, I'm still bearish to the market, whatever. I wait for MHP breaks to short this. If it breaks orange, it falls 80 more points on the S&P futures. Okay, so that's the trade to wait for. If I'm trying to short, that's what I do. If I see the greater market's bullish, I definitely went along the market. So in QQQ, there's a bull support here. That is a great way to trade. So if obviously we get a volatile sell-off, what I'm looking for today, like why I'm waiting, I'm not just not trading, I'm waiting. Right here is the big pivot. Turn this up. And again, if we lose this, it falls really far. And there's some really good setups in here to long from. So all these arrows on my screen are like some of the best pivots you'll find. And that's what I'm waiting for. Hit the fucking like button. And somebody say, ain't nobody like the RS Mac. Tell your kids, tell your wife, tell your husband. Because the market trying to take every money up in here. What about the NASDAQ, M&Q? Yeah, so this is NASDAQ, right? So NASDAQ futures pivot at the same place the S&P futures, I mean the QQQ pivots. So NASDAQ futures equivalently would be like right at that same spot. Read out from here. Any volatility flushes me or dips to buy. They are dips to buy. Ooh, who didn't chase along? Ooh, who's been sitting out since the morning? Ooh. Let me tell you, look, very careful today. The market's still volatile, but it's going to try to sell. And if it does, I'm going to get some dips if things look great when we get there. I'm not shorting this, but I am eyeballing possible longs. In the futures world, let me show you where the pivots are. So matching QQQ, this is the big pivot there. There's a scalp, and there's my favorite scalp. So these two are my favorite trades right here. Just these two little scalps right here. If we touch these lines, I'll make $20,000 today just trading this right here. That's it. Just guarantee I will make a trade there. Guaranteed I will make a trade there if it falls. I guaranteed I'll win, but guaranteed I'll play it. Equivalently on futures, this pivot is roughly here. If we break here, This goes right about to there, about 2,900, and those pivots are about there. The other side of the coin is that this orange or this yellow line continues to move higher. So these are all the different trade setups I'm going to take. This is the big decision. If it falls here, I'm going to make plays off of here. Here to there's a trade. Here to here's a trade. There and there's a trade. So some pretty decent setups here to work with. Unfortunately, up here, it's out of bounds, so I don't really like to do much. I'm not a big fan of here. And if it continues to go higher, which it likely will do, then I'm happy. Means tomorrow's going to be some good trades. Easier day tomorrow. Y'all like my guru song? Where's all the gurus and their pet stacks? I need to actually write that song. But I think it's in poor taste to post your dice roll wins when there was no strategy involved. That to me is, I think it's poor taste. There's no strategy involved. You can't really take credit because unsuspecting people think, oh, this guy's good. How did he know? How did he know? How did he know? How they know? No, they didn't know anything. You can't predict that stuff. Even the bake analysts get it wrong. Quants get it wrong. You look at the distribution of how everybody voted on CPI. Not everyone got it right. So it's just the coin flip, and and I want you guys to look for this on coin flip days when Calus goes or an event goes one way or the other. If people post their big wins, scroll back to the last one, and they likely didn't post their big loss. And then be skeptical of something like that. Just be skeptical. What am I trying to look for? Is it oh. What do we got here? I think ETF still has their 90% off sale, by the way. Yo, what's up? What's up, Lamont? Every day from usually, I'm starting doing like 30 minutes before market opens. So usually around 9 o'clock in the morning or earlier. I'll try to maybe even do earlier now. Until about noon. It's like the stop rule in the pool, the slop rule in the pool. If I mean the stream, you get 1090 income and you can deduct expenses and contribute to solo 401k worth a think. Hold on, wait, let me say that again. If you get 1099 income, you can deduct expenses and contribute to solo 401k. This goes beyond my expertise. I don't know about 401k and what you can do with it. I've been so far detached from having a 401k. I haven't had a job in well over a decade. Why do I think ES? I don't think ES will extend downward. I think it's possible that it can. I think the ES is more likely to stay the fort, but my confidence is not high on either side, which is partially the reason why I sit out. The market still has volatility, which means flushes are quick, just like yesterday. It's not that it will fall. It's looking to support here. But if we start losing this yellow line here, it's pretty nasty. So the idea is that I'm going to react instead of guess. So I'm just drawing all the probabilities on here, Pancham. The pivots are, MHP is always a strong pivot. I reverse this 90% of the time. If it breaks through here, it's a gamma event that gets pretty nasty. So this is one of the greater market signals for bullishness. If we hold 510, we're good for the day. If I am a bull, then my bet is 510 holds. If I'm a bull, I need to buy there. If I'm a bear, I'm waiting for 510 to break, and then I'm back to shorting. So like the split today is if you're a bull, then this is very important to you, in my opinion. If you're a bear, then this is very important to you. Anything above here it's not telling you much other than it's still bullish, right? So like direction. So I don't think it'll extend downward. I'm not drawing this is not what I think will happen. I think the market's going to continue to go higher. I'm saying if it does fall, I've got pivots there. So somebody said that you can defer the taxes to answer the question. Jonathan with the big winning answer here. Which futures funding firms do I use? I use Elite Trader Funding, and I use Apex, and I use TopStep. And I just started looking into like Tradeify and Funded Family. Danny Blue says the thing you learn most is catalyst. Now you understand the market moves so volatile when going past those bands. Yeah, it does. So today, I don't do trades up here out of bounds. I don't do anything. So if it just inches higher than inches higher, I don't do much. If it's down in here, there are dips to buy. So I'd like personally to see the market try to flush. That way I can get some longs on it. But if you were to ask me, put a gun to my head, where's the market going today? Is the market's probably going to do that. I just don't have a good entry point from here. The R&R, I don't really have a spot for me to calculate where it goes to. I'm just eyeballing it. So that I don't have a good place to trade to an exit target. Usually event days like this, I don't like to take the bet. I don't like to chase the long. Why so many prop firms? So a couple of things. Apex, I'm already funded and on my way to payouts there. ETF, I was already promoted to their live elite, so I trade their actual money. So I'm outside of the prop firm, sim funded there. So they gave me a trading account with real money in it. And TopStep because they have a leaderboard, and I want to get on the leaderboard and beat everybody. Futures Family is run by a buddy of mine, Jadon, and then Tradeify is run by Brett. And both of them have chatted with me recently. And again, it's to have more variety for you guys. Y'all want codes and y'all want to get discounts and stuff. So if I work with the firms, I can get discounts for you guys. I don't personally see trader funding programs as a long-term solution for traders. It's a place for you to build a bankroll if you don't have one. And it's a place for you to get started if you're just getting started to practice. Like experienced traders like me tend to shy away from that kind of environment because it's so much harder to trade in. The rules are ridiculous and the taxes are crazy and the profit split is stupid and it doesn't make sense. But because it's popular, we got to jump on the bandwagon and do it because you guys want. If I don't do that, then you guys are going to follow some numbskull out there. Right? In a rented Lambo and a Rolex, posting your 20 accounts. I gotta to stay relevant. I gotta do what the kids are doing, unfortunately, because I'm on YouTube. But my personal choice is to trade my own money. Always, and that should be your goal too. After you make enough from your payouts, take that money, pay the taxes on it, throw it into a trading account, trade your own money. That's usually the goal. And that bot is going crazy. I need to change the bot again. Hold up. So you guys don't forget, today we start our classes all over. If you guys want to take our classes, go read what everybody says about them. $20, that's it. Read the reviews. I'm going to tell you guys before I get out of here. Go read these reviews. We start over at class number 1 today, and we go through all 20 classes. Every day it's an hour. And I'm going to show you this. If you've recently taken the classes, please leave a review. We really pride ourselves in a review over at Rocketplace, over at the Marketplace. We have a couple deals. So basically now we made our Pro Plus monthly $150 a month after the first month instead of $199. That's huge. It's never been low like that. So $150 instead of $199. So first month is half off. You do that. Now we have a yearly option, which is really awesome. If you want a yearly option, And then the courses are here. If you've done the courses, please go to like my purchases and leave a review, but you can read all the reviews left by people. Again, these are actual customers. This is what they've purchased. Nobody's paid to leave anything, and this is history, months and months and months, 4 months ago, 5 months ago. You know, recent, 20 days ago, 2 months ago. Like I said, click that link and go see it. Go read what it is. Come to the classes. I promise you something. You will learn. And then realize. In our Discord, we have a Zoom call channel, and at 3:30 we go live every day. Today is class number 1. It's called The Edge in Probabilities, and it goes over a trading strategy that doesn't lose. Right out the door. It's a hypothetical baseline to tell you why your trading strategy loses. It's a fun little like icebreaker to start off the courses. Click that link I just posted. Yeah, so in the Discord, there's a link that's called Zoom calls. Yeah, if you're in the 1 month, the courses come with it. Oh, yeah. You will enjoy your time spent. That's for sure. Can I have somebody run a voice channel in the Discord? If somebody wants to. Y'all have full reign to go into the Discord and do whatever. That'd be kind of dope. Maybe Rich or somebody out there wants to take over and do a voice channel. That'd be kind of cool. Ask Barky. Yeah? That'd be kind of cool. Barky's good. All right, so this is good. Market's pushing higher. I think the bull market's back. Pretty solid. To me, that's extremely exciting. Oops, what the heck? Yeah, so today I think we still keep going. I think that the market's still going to keep trickling higher. This is my call. My thought is here. We keep going higher. Bull market's back. It's good. Nothing's really deteriorating. But I do like to say is that I like to wait just in case things kind of spiral out. And if things spiral out, I've got setups on. You see how I operate? I have my pivots already like ready to go, and I'm just gonna wait for them to play out. Ooh, yeah. Everyone sign up for the class. For $20, your guys are gonna have a grand old time. Hundreds of people in that class every day. We repeat these things. They're just like how we go. Each class is one really strong technique. So because I know that the market's kind of like, I don't necessarily like have a trade setup in mind. And this market's not really going anywhere, so it's like it's good to not be losing money or making money or even just sitting. Let's have some fun. But yeah, I would love everybody to sign up for the class. We're getting started today. Should I make that? Should I get AI to make a song like, where's all the gurus and their fat stacks? Can't make it live. The classes are recorded and they will be posted in the Discord. So we go through all 20 classes, start over, 20 classes, start over, 20 classes. The last iterations of them are already there. You can go through the old ones. They're the same. We repeat for repetitiveness. So when you go through it a third time, everything starts to stick. So Billy Joe, did you click claiming on your Discord roles? So go to your my purchases or my communities in your dashboard when you log in, and make sure you click claim on Discord. Okay. Are we moving down? Top Step doesn't give out codes. They don't do affiliates anymore. As far as last I've heard. So these are my pivots today. Like I said, if the market flushes, there's a lot of good trades down in here. This trickle up is really hard to say. If I were a gambling man, I would say that the market's still likely to go up. But this kind of pattern is not really giving me any evidence of momentum. So volatility may still be in play, which means we have some good trades down inside of here. I'd love to see this flush out. I could play down in here. Billy, did you figure it out? We just had like 14 people sign up. That's incredible. We're gonna have a big opening when we do these classes. Always a really big opening. The first class is by far my favorite class. If you've ever wanted to learn anything, part of what we teach that's extremely important is risk and position management, like sit out rules, market avoidance rules, confidence rules, like why I bet big here, why I bet small here. Everything's mechanical, so there's no guessing. Everything I do has a reason. There's all a bunch of indicators that tell me where to bet big, where to bet small, and it's all seen on the screen. It's very little information that I use. I just piece it together every day. There's a reason I'm sitting out right now. There's a reason I'm not chasing along here right now. This is one of our rules. It's a master class on betting. It's not a master. It's like if you take poker and there's a master class on these are the odds. Okay, this is the odds of the cards that you have. And then there's another skill set, which this is the odds, or this is the amount that you should be betting based on the amount that you have. This is the probability you have, and the probability the next card you want is this. This is the amount of money you have. This is the amount of money they have. This is the amount you should be betting. And should you double? Should you not? This is like, it's a class on the strategies of betting. I'm still waiting to see everybody's fat sacks on the guru side. One of my thoughts is how many people out there, I haven't seen much since the market, again, like I said, my thought is that we still go up here. I think that we're still rallying because the bull market's back. But I don't see a lot of people out there with some big fat gains. I don't know. I think today confused a lot of people, which is good. Market needs to be confused and shocked back into bull side. Bull market is back, baby. Bull market is back. Ooh, 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 ooh. Well, wait, where did everybody go? There it is. So, let me do UVXY. So today, my thought is that we still go up. There's no fading today. I think the market still goes up higher. VIX is not in any kind of momentum-based move, so the volatility expansion is not going up. VVIX should be coming down, and VIX being contained is really good. That's awesome. If VIX loses here, there's an absolute decay in volatility. This market will go straight up, which is great. Like I said, I have trading pivots marked on the screen as to where pivots will be. We are out of bounds here. I don't have any pivots to play on, so that's why I don't have anything to trade on. I could just plant money and plan on the long side if I was going to guess, though. But yeah, I wrote today, bull market's back. We're continuing to go higher. Market's going to go higher. Do we cover futures and FX? Just all futures. That's all we do here is futures. So at eval, you can average in once pass. You can only enter and trade in one spot. It depends on who you're trading with. Some firms let you do dollar cost averaging. Some of them don't. It just all depends. You're going to have to research who does what. Usually in the eval side of things, you got to read the rules. Some firms don't care what you do. Some firms are really strict on what you do. Most evals in most places don't have rules, but some of them do. You got to research. I think like, was it Blue Sky or one of those ones are very strict on the eval. Like the eval has consistency rules on it. Blue Sky was the one that had that contest, and everybody's like, you guys, they're doing a contest. Go check it out. No one looked at it. After the first day, the leaderboard had somebody with like thousands of % gain in a single trading day. I was like, that's a high frequency trading algo bot if there ever was one that's cheating the sim system. Nobody's got thousands of % after a single day. I was like, all right, this company has no quality control, and I immediately abandoned thinking about them altogether. TopStep has a consistency rule in their non-XFA account, which is you must have, yes, 50% per day. So basically you aim for beating it in 2 days or more. You can't win the account in 1 day because of 50% consistency rule. So if you aim for like 50%, then 50% of your 100% that's needed, then you're good. Shane Ness nailed it. Oh, by the way, those of you that won the contest yesterday, the ETF giveaway, I need to give you all your codes. I've been taking care of a sick eye doctor. I'm still trying to see where everybody's big fat stacks are on their gambles today. Were people trying to short? It's all quiet on the Guru front. Where everybody's wins. Let's do what everybody else is asking me to do. GameStop. I've been reporting on GameStop. Its monthly maps were actually looking really solid the longest time. GameStop is looking decent, but man, boy, it took a hit yesterday. So GameStop was like, I was reporting a short squeeze at GameStop since like basically over a month ago, and I'm just trying to see what it did. Now, for whatever mechanism we had yesterday, it was very reactive, violent, even though there is a liquid moment here, right? Bulls are strengthening, bears are strengthening. That's completely interesting to see the GameStop pull back. But everything was pulling back, right? So it's not like it's like a characteristic of like the entire market. All right, so today, these are the setup limits here. These are all the potential scalps I can take if the market does move. MHP line is always a decent long entry to trade off of. Here. Where's all the gurus and their money? Where's all the gurus and their money? I could write a country song. Does Elite not like Safari? Oh, why is it like not working really on your browser? Blue Sky is real live, real monies, I believe. Yeah, well, I'm saying is like the contests they had. So people can write trading bots because the sim feed, like the data feed on the sim account, is different than the real account. It's delayed slightly. There are people that actually exploit that. And they'll write bots that'll just basically trade for like 2 or 3 seconds at a time across the bid ask, and high frequency trade their way to profits by explaining the arbitrage between the real and fake data feeds. And so when you see somebody make thousands of % in a single day, it's a bot. The ETF had to kick out some people that were botting that way in the contest I was in, because it's easy to see that nobody makes hundreds of 1-second trades a day without botting. Do you want me to play something? You may look at UNH. Yeah, let's look at it real quick. bum, bum. Do, 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 do. United Healthcare broken a bull zone. This is now illiquidity pocket here. If we support bull zone in UNH, there's run up to resistance there for today. So not that it's going to go there, but there's definitely good long pressure here. Today we had open, orange, open. That little V is this V right here. Any break of open goes to next resistance, which is to fill the gap. Bull zone support, if we support, is another move higher. UNH looks right. Proxy, you can't access ETF through your VPN in Safari. I think some of them may not allow you to use VPNs because they're very serious about tracking the IP of the user to make sure you're not account sharing. But that's just me. I don't know. I would assume that they would block all VPNs. Somebody's asking Saint M's, how much money would you start with? No plan yet. No. Not today. I'm contemplating, do I want to take the long on monthly hedge when it comes back? Right. That's what I'm waiting for over here. Let's make it bigger so y'all can see it. So my question is, do I want to long off MHP? Oh, looky there. Looky there. My original fear of the market. Do I want to play there? Okay, so let me draw out the futures pivots again. Hold on. I just have a feeling like our original spidey sense was like, okay, this is probably going to go up. But here's the rules. Okay, a bull is bullish from here if you're a bull. This is the bull pivot. If it breaks, the pivots are very strong. It falls all the way to there. Resilience is positive though. So it'll fall to there and it will hold and try to bounce. The problem is MHP breaks are pretty drastic. If res goes less than 0, which is that white line, it completes the gap to go to here. Now, below that, I have a few really good entries I do like to take. It's really big here. Now, do I want to play the long side one more time? Do I want to? Why am I? Let me try this again. That is the support. If there's a bull setup, that's the place to long from. If it starts to gain momentum above orange, I'm back in on the long. So I'm going to watch it for a little bit. As it's still decent, DD still decent. We're good. My favorite setups are here. This is Matt's favorite. Here to here. Favorite. Under all circumstances do I take these trades. And this one right here, favorite. These are my bread and butter scalps. So indicators are still good on the rest side. We're going to watch this very carefully. That is so weird because I am logged into my futures account. I have no idea. Whatever. We'll put this over here. So I'm going to let it overshoot, then reclaim, then I'll contemplate taking it long. Redraw it over here. See how I didn't chase the long because I got such good rules to trade with. Okay, if we break, it goes all the way through here. Res greater than 0, it's going to bounce. Res less than 0, it's going to pull. Res is this white indicator at the bottom down here. But it's great. Right now it's greater than 0. It's probably going to bounce. Res less than 0, going to pull back down to here. That's favorite trade is from here to here. BSU bull zone bottom. Second favorite trade is here. Every single time. Favorite, favorite, favorite. So if this market flushes out, oh, I'm gonna have a big trades below. Hit your target back to the open. Question is, do I take the long here? Do I want to be... maybe? What do I have to lose? $500? I am on my pivot. Everything's looking solid. Okay, why not? I hope I lose money on this account. Then I can get huge updates down at the bottom. So I really hope I lose. That's what I'm saying. I really hope I lose. Let's hit it with 2. Whatever. Something medium small. I hope I lose because I want the better trade. But you know what? I'm going to take the bull side because I have to. But I definitely want the better trade. I want this to flush out so I can get the good trades. So let me tell you, I'm willing to lose 10 points on 2, which is $1,000. My P&L stops are set with S&P 1 strike distance below any major pivot. So roughly 10 points ES. It's about 54. And roughly 40 points NASDAQ, give or take. So I hope I lose $1,000. I hope I lose $1,000. I repeat, I hope I lose $1,000. So I want to make 20 on the way up. One account, I'm not touching this anywhere. I'm not trading this in all the accounts. I'm just going to play on one. I hope I lose 1,000. I hope this flushes. And I'm wrong. I want to get good eats down at the bottom. But I'm going to err to take the bull side trade because it does look pretty promising. So that's the first bounce we had today that I scared myself out of. I'll take it one more time. This is determining if the market's bullish or bearish going forward. Let's see. Are you a bull today? Are you a bull today? Anyone know which way market will go today? Do I ever swing trade futures? No. Futures are not designed for swing trading. Like I said, I'll be happy if I lose $1,000 today. And I can get the good trade. Somebody asked a question. Hold on. I'm not ignoring you. I'm sorry. I'm not reading chat right now. You said something like, does software cover futures Forex? No, it doesn't. You discovered this, so just want to clarify. HP and MP will be available around 5 a.m. of futures. So HP and MP are available at exactly 9:30 in the morning when the equities market opens. Overnight dynamics are available right when the Globex opens. So these green lines, which are called become DD bands, but their risk intervals are available every night in the futures market opens. There's a video you can watch. Yes. Hold on. Let me show you the video. I'm so sorry. I'm just focusing on my trade right now. Sometimes you guys are chit-chatting and I'm not able to see what you're saying. Let me show you, brother. My bad. I didn't mean to ignore you. I owe you something. I'm not ignoring you, my man. Hold up. I just got to focus sometimes. Where was that? So you want like an all-star class of what it is we do.
The future is at your fingertip.
This is a long-form video of what we did when there was a holiday not too long ago. This video will go through Lucha and everything that we do. If I have time now, can I direct you to video where you can look at? Yeah, let's take a look at that. My bad, I didn't mean to ignore you, bud. I got you, dude. No, sometimes I'm just like, I'm focused. So double up and lose 2K. RJ. Double up and lose 2K. All right. If I push this button one more time, I'm gonna lose $1,500. You guys okay with that? I don't feel there's momentum, but does VVIX usually fill its gaps? No, gaps don't like to fill. Gaps like to hold, and I don't treat it like a gap. VVIX is a calculation of the state of the VIX. It doesn't really trend like an instrument, like a trading thing. Oil is tearing. Yeah, no problem. Like teaching you guys the method we do here is a little different than whatever. Well, what I do is I'm using equities pivots and futures pivots together to make assessments on the market. So I do have favorite setups in here that I do like to trade, but mechanically I always reverse at this MHP. That's one of the things I always do. So let's see if that's going to produce a fruitful setup for me today. I hope I lose $1,000. Oh, I hope so much. Hold on. Dude, all these like outsource, I get phone calls like 50 times a day. That's like, I don't know what happens. You start a business, you're in some database somewhere because everybody's like, does your business need funding? I'm like, no, it doesn't. That's people all left and right. I get phone calls all day long, and it's not people from the States. It's like outsourced call centers. It sounds like loan sharks. What kind of mafia thing is going on here? Yeah, sure. I like to take a unsecured business loan for 30% interest. Sure, why not? You got some guy with like an eye patch named Ivan, like knocking on your door trying to collect, breaking your legs if you don't pay. No way I'm gonna pick up a random phone call from a call center in India and start signing deals for business loans. What the heck? You get dozens of calls a day. It's crazy. Like, I don't know if you guys, your phone gets blown up somewhere, but left and right. Sometimes you ask them, you really have to pay and break it. Yeah, I'm like, these are kind of loans that if you don't pay back, they break your legs. Where's my money? Oh, you said you got to pay back. You got to pay back double for protection fee. I was like, nah, no thanks. You're like, you need to take me out of the database. They just hang up the phone on you. They don't even care because it's India. They don't really care about the laws here. So they're just going down the Rolodex. They don't take you off any list. They just keep going. I hope I lose $1,000. I hope I do. I hope I'm wrong. If I'm wrong, I'm going to make a fortune on the way back up. I hope I'm wrong. I hope I lose 1,000. I want to be in the long because mechanically I need to take it. But I hope I lose a lot because the plays are big down here. The big money's here. If we get a volatile drop, the volatility is going to be big trades on the way back up. Isn't that crazy? I hope I lose $1,000. I hope I do. I hope I do. When you're a salesman, you would grab business info from state gov websites, scrub the phone on the site. You're good to go. Yeah. God, getting one of those is loan sharking at its best. You signed up for the 20 classes? Oh, Miranda, cool. Ringo, we'll see you later. See y'all this afternoon. So, really, I hope that I hit my risk limit here and I sell out. I'd like to see the bigger plays at the bottom, but mechanically speaking, it's technically correct for me to take the long trade. It's not something I'm betting a lot on. It's not something I'm gonna bag hold on if I'm wrong. It's just a mechanically correct trade to take. And I hope I'm wrong because I want to get the better swing. So mechanically correct trade is kind of like blah. So we'll see. So I've seen this double bottom in futures right now is what I'm looking for on this pullback. This is the place where the market either tanks or doesn't tank. This is it. This orange line is extremely important. What you do is you go to if you go to your dashboard and you claim the Discord role. So you go to like my purchases or you go to my communities in your Rocketplace account and you click the claim button. It'll give you access and a path into the Discord. And there's a channel called Zoom Calls and we post them every single day. 3:30 in the afternoon. Like I said, if I lose $1,000, that's the range that I know the market's going to pull back a little bit. And we're good. So we'll see. We get a little red and green. This is what happens. So this is like hugging like right on that edge there. Stocks are still holding on. Ratio is still good. I feel like it's going to try to sell. But what do I know? We'll see. VIX is still clean. I mean, the market's still clean. Am I right? Are we bullish? Am I right? Let's bull market back. Holding my breath. Like I said, I hope I lose $1,000 because I want to play the good stuff down here. I hope it falls. I got to be in the mechanically correct trade, though. I got to take the attempt instead of just waiting. I got to be on the right side of the move. The right side of the move, I got to take it. Man, phone call again. I'm going to answer it and say hello. Hello. Hi, good morning. Hi, how's it going? Do I know you? Oh, okay, great. How do you know me? So can I have money and not pay it back, right? For free? What if I don't pay it back? Oh, it's not free, but it's the best offer in the market. Okay, can you hold, please? I'm gonna get my assistant really quick. Okay, hold please. Thank you. Usually I just let them hold for like 10 minutes before they hang up, and then that usually. See, but I don't like to be mean to them because they're just doing their job. Pats on back, you know, they have families to feed and stuff. But what usually happens is if you make them waste their time, they'll not call you anymore because they make money on. Here's how you really get them to stop calling you. You make them waste an hour of their time, and then you don't sign the thing they want you to sign. And they will go out of their way to be like, I'm never calling this person again. It's a numbers thing. Don't ever be like, well, fuck you, stop calling me, you know, because they'll call you every day. They don't like that. So what you do is just make them waste their time. I usually say, hold, please, let me get my assistant or something. And I just get, yeah, tell me about your own. Can I speak to a person? Do you have like a manager I could speak with or whatever? And they get real excited. Get the manager on, let him give you the spiel, let him talk for 10 or 15 minutes. And then, you know, I wish I could have a bot, like a robot that would just Do it for me. I get like so many a day. It's so weird. I'm never mean to. I usually don't answer as well, but these like the caller ID says like Memorial Hermann Hospital and stuff, and I'm just like, I have to answer every time because it could be my mom. You know, it's like, okay. So I hope I lose $1,000 today. I hope I do. I hope the market falls. I hope. You believe that? It says like Memorial Hermann's Hospital in Houston. You believe that? Or it'll say like Houston Police Department. Like the caller ID says all kind of stuff that you like have to answer it. The tricks are so good these days. You can't not answer it because if your mom just got in a car wreck or had a stroke or something, right? You got to be like picking it up. So if you waste their time, they'll take you out of the list because you're costing them money. If you make them mad or yell at them or make them immediately hang up, they just dial the next person without even thinking about it. It's a numbers game. So the goal is to make them waste as much time as you can, and then they'll take you off the list. But it's like a never-ending game. I need to like, who needs a phone number anymore anyways, right? Phone numbers are overrated. This is the age of the internet. Nobody talks. We all just type. For some reason, dude, my speakers keep turning off, and I don't know what the heck is going on here. But have I lost my $1,000 yet? I need to lose 1,000 so I can make 20. I have to take the mechanically correct trade. I have to take the correct trade. I have to take it. Now, again, I always try to reverse at MHP and trade it. But I'd love to lose $1,000 because these are the better setups. If the market spontaneously becomes volatile and starts to crash out, these are the big runs today. You got a bunch of like 30, 40 point moves in S&P futures if it does fall out. So ideally, I'd love to take a small loss and be wrong on the mechanically correct trade for this market to completely collapse today and I get some good plays down at the bottom. So roughly close to like 1,000 to 1,500 is when I'm going to be like, okay, I'm going to probably bail on this. I need recording my assistant say hold, please. That's hilarious. Kim has her kid answer the phone. That's awesome. Yes, not budging. Yeah. Do you think this market fades out today? There's no signs of it doing that. So we'll see. Like I say, I have to take the pivot. I always take the MHP pivot every time. It is the correct trade to take. But the market does sell off and fade out. That's great. I'd love to see some lower lows to play off of again. We are rolling into a new candle in roughly 6 minutes. Let's see. How are we going to roll this? Ooh, 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 ooh. How did my song go that I was singing earlier? The Guru song? I need to rewind and go back to it. Oh, yeah. Hold on, ready? Let's go back to Twitter before I forget my song. How many people posted their bajillion-dollar day today gambling on the right side of the market? How many people made something today? Where's all the gurus and their fat stacks? Who rolled the dice today? I don't see a lot of people posting big wins today. I don't think a lot of people traded, or at least they didn't make money. They ain't telling you. A lot of people very adamant showing you their daily P&Ls, but then you don't get the loss days. Where's all the good guru losses? Nobody likes to post when they lose money. Like I said, I hope I lose $1,000 right now. The mechanically correct trade is to be long from here. The better trades to take to make all the big fat monies is if we fall. There's a lot more to it. I don't want to see the bear market come back. I like seeing that the bull market's kind of manifests itself again, which is good. I made that post today. Bull market is back. Dustin gambled 2 small micros, so we got lucky. Big win today along the open. Nice. Trades by Matt shows his live trades. Yeah, trades by Matt's good. He trades live. I'm looking at my Twitter feed to see if anybody posted their big fat wins. You're talking. I always like to like the trader funding simfluencers. The people that are like, check out my 20 Apex accounts, and all of a sudden it's like 50K a day, and then the next day it's quiet, and the next day it's quiet, next day it's quiet, then they made 40K, and then it's quiet, and it's quiet, it's quiet. Today is usually a day like that where a lot of people like to say, I got a really awesome system. Look at all this money I made on the news. But, you know, coin flipping on news is not necessarily a strategy that's worth bragging about. So I'm in a position, I hope I lose $1,000 because if I do and the market's falling out, I get some better trades down below. But I think it's going to go up though. Bull market's back. Everything's good. This is dip to buy monthly edge pressure. Gamma positive on monthlies. 590 on SPY is the level, which is roughly equal to 5960, give or take. Put a setup here to take a trade on. So the thing is that a lot of people like to post how much money they made on the CPI dice roll. But then like yesterday's PMI, you know, they may not have posted. So I always say it's like in bad taste for people to just post on Twitter a big win on a dice roll, but then you didn't post your big loss yesterday's dice roll. I only like to show the wins sometimes. I think this market's going up. What do y'all think? We going up? Are we going up? What do y'all think? Or is a giant red candle to come out and just nuke this market? What do y'all think? What do you think? What do we think? 59.45 to test the cat? Probably. But MHP break would be devastating. If it falls below 59.60, it's bad. That's bad for the market today. I don't have a target. That's the one crappy part. There is no real target on a trade like this. 21,325 on Nasdaq is a high volume pivot on Nasdaq, but the S&P doesn't really have one other than actually no 60.14. I take that back. 60.14. I found one, a red line. My bad. Don't let me lie to you. 60.14. I did find one. You want to see if I'm right? It's big. It's big ups if it goes. I thought it was unbounded, but I think I found a pivot. Now we got to wait one more minute until the 11 o'clock candle comes. Right when the market shifts to new candle, it's going to likely move or do something. So we're going to get volatile in about 1 minute. Counting down. Counting down. Have I ever backtested hedging with micros if you get stuck MHG break till your next entry point? I haven't done that. I have not tried to do that. Like I said, I hope this market flushes. That way at the end of the day, I got some really good setups down here. My favorite trades are all down in here. So if we flush, I'm going to wait, and I get good trades. So mechanically speaking, I do long outside of the green band on MHP. That's technically what I do. There's that negative res. There's that 11 o'clock. This is the stock move. It's the flush, and then we move. Let's see what happens on the stock side of things. I told you we got 1 minute till something good happens. Do we get that lovely move? Is today the day the volatility craps out? Are we going to get a big shoot up green candle if we get whatever support we get in stocks right there? Res is right on the edge, minus 0.4. Ooh. The suspense is killing me. I did make a tweet and said the bull market's back though. Let's see if I'm right. Again, I hope I'm wrong. It's kind of funny. I hope I'm wrong because the better trades are way down below. We flushed out. We got some good trades below. Like big runs. So we'll see. Did I mark it in yesterday on PPI? You talking about me? I longed on 5 accounts yesterday on PPI. With the goal of blowing them up. I was taking the dice roll because the market was building bullish and I bet bullish on the news. And I don't ever bet on the news, but it's such a transitional phase. It was so easy to see that the market was building bullish. I just put 2 contracts on and like 5 accounts for like $4,000 each. I had like a $38,000 total day yesterday. It was good. But like a lot of that was attributed to coin flipping. Like I said, I'm not taking any credit for that. I flipped the coins, but the overall fundamentals were, and I was like, if I blow up 5 accounts, and then I got 15 accounts to play at the dip I wanted, I would have just traded off of those and made it back. But it was kind of how I did it. Black Beauty's like, I'm trying to lose it. It keeps giving me free money. You like your trading style lines line up with yours? That's a high win rate. Cheater. That's the way to go, man. When you got confluence, that's good. MHP long, technical, good trade to take. Resilience is positive. Looks like we're holding the gap up. If we break the open, that's going to pick up some momentum for this candle. Is the bull market back? Are we back, baby? Are we back? What do y'all think? Are we back? I hope I lose 1,000 and it's probably going to give me money. I fucking hate making money when I want to try to lose it. What's wrong? What's wrong with this equation? Stop giving me money. Stop. I want the better trade. I want to lose. Go down. Oh, my Lord. Come on, go down. Go lower. I don't mind longing from here, but I don't want this to be the trade. I want the momentum, baby. Come on. Stop. Go down. Go down. Res is positive and res is positive. It's good. The sign's good. Signs are good. So what I want, MHP is a 90% probability that markets will close on the same side of orange. And it's, guys, tell you this. So orange line in S&P futures, 90% of days will close on the same side it opened on. We opened above, 90% of days will close above. That's why it's such a key support pivot. And I got to take the long because it's the probability. That's such a high probability that happens. So I have to take it. I don't want to take it. I want it to go down so I can get good plays, but I got to follow the trend. I got to follow what happens. Ooh, ooh, ooh. Why do my speakers keep turning off? I still don't get it. It's like every 5 minutes, my speakers are turning off. Like I can't hear. Yo, what up, prop firm? Market's good. My S&P level is 6014, Nasdaq level. Nasdaq level is 20. Okay, these are my upper targets. Draw them on the screen. Okay, ready? 6014. 21,532. It's big ups. Again, I don't think it goes that far today, but these are my upper targets. It's kind of way out of bounds for Nasdaq and S&P. 60.14. Now it might take 2 days to get there, but S&P is 60.14. And I don't know if it's going to get there today. 21,532 on Nasdaq. I doubt that it gets there today, but I have to take that play because all the signs are pointing up. I have to take it. I got to take the trade. You know what I'm saying? I wish I was losing money. I wish this trade wasn't the trade. I wish it was losing money. I can get the $20,000, $30,000 a day below, but fuck it, I gotta take it anyways. I have a system on how I trade, or how many contracts I trade every trade. I have an equation that I use. So I take the net lick of my account and I divide it by the initial margin requirement of the futures contract, and I get my maximum position size. Typically, that's what I set for my maximum trade. That maximum trade is my normal. If I have confluence with the trade between my indicators, DD, resilience, and other things, I trade my max position size. If I lose confluence, then I trade lower. I'll trade. I have a sliding scale. I call it my normal, my medium, my small, and my sit out. On a long trade, if I lose one of my indicators, my normal position becomes a medium. I trim or I trade less. If I lose another one, it becomes a small. And if I lose 3, it becomes a sit out. So I have a sliding scale that trims my position. On a short trade, if I lose confluence, I close everything out. Stop winning. 90% chance of winning. I want to lose this one. I don't want it to go up. Okay, so what this is actually doing, it's a backtest probability that we have. So monthly gamma, which is what you're looking at. This is the monthly gamma exposure of market makers and the underlying options in SPY. Long-winded answer to say that this is a guaranteed high volume spike and high order flow due to hedging. Okay, that's it. So if you guys give me like 20 tickers, I don't care. I can do random tickers and show you the same thing. When you touch this orange line, it is guaranteed high volume. And this is the one thing that we can do. You can't predict the stock market, but I can predict volume using options. So I can predict volume in futures. I long futures here because there's high volume. Do you see that? So our magic recipe and what we do is we can predict volume in the market. I can tell you where market makers are going to act. Sellers of options. Whole different style in your appreciation. Okay. So the statistics of the market not. So here's some statistics on these orange and blue lines. The orange line is monthly gamma. The blue line is weekly gamma. So on SPY, for an example, for S&P futures, on the orange line, we opened here in SPY. Per our back test, 90% of days close on the same side of orange as you open, meaning that only 10% of days contain enough resistance to overwhelm that monthly longing pressure. And this is where the long maximum is. Maximum gamma means maximum delta hedging, i.e. maximum order flow. That's where the volume spike comes from. So we use gamma exposure models, but we can actually exclude all retail options, look just at market maker. That's why our gamma exposure model is the best one out there, period. Because it gives an actionable pivot that 90% of the time you don't break. So technically speaking, I have to make that trade. I have to, but it's for small ups. I have to plant money and long it because 90% of days we close above there. So as you see, money's there. If we lose, it's 10% of the time, and it's drastic. When you break MHP, it causes what's called a gamma event, and it causes a collapse. So because I was like, I hope it collapses, it'd be nice, I have to take the long. But if I'm wrong, I stop out, and then I wait, and I've got really strong volatile trades back here. Here are the stats on all of Rocket Scooter stuff if you guys are new here. The market closes on the same side of orange 90% of days under all conditions. The market closes on the same side of blue 80% of days under all conditions. So 80% of days will close above here. 90% of days will close above here. These are, and again, you guys have to come to our classes. It's $1 a class. We go over all these techniques. This one, when that number is greater than half, 90% of days close above here. They're all really strong pivots. The indicator on the orange line is called monthly hedge pressure. A lot of the influencers use Rocket Scooter, who talks about hedge pressure, monthly hedge pressure. You may hear it all the time. Does that 90%? It's not trade, Billy Joe. It's the number of days that close on the same side they opened on. Does that make sense? So we measure where we open, which was here. This white line is where we open. And then we look at where we closed. 90% of days close on the same side of orange, which means orange is a really strong pivot with the high volume. That's what it means. Have I thought about algo trading? I thought about algo, like writing this into an automated trading thing, but I haven't yet. But I maximize my position size based on some issues I have. So one of the issues I have today is the market is moved a certain distance we call a catalyst. When you move more than the distance, I trade small, which is why I'm not hitting it with 10 or 20 contracts. I'm hitting it with 2, something small. Because when I move past this pink line, I'm conditioned to trade smaller. I have a reason for everything I do. I didn't come from options and futures, actually. I actually started trading stocks in 2010, and I fiddled around with it for a little bit, and then I moved to futures a couple of years later. I actually I started, for the most part, getting really serious in futures. But the thing is that I had a brainstorm that, options, here's how it worked. In futures, the first thing we came up with was the risk interval. The risk interval is one of the most interesting pieces of machinery you'll ever learn. The risk interval is a number that is, people call it a hack, but let me show you on my Thinkorswim chart here. The risk interval is the magic structure point inside the futures market. You may have never heard of this thing. You may not have heard of CME span. It's a program that sets margin requirements, and every single day we use that program to create actionable pivots. Look at the pivoting, etc. Here are some stats, and these are designed to set these margin requirements. Let me show them to you. Another cool stat is in futures is that 88% of days will close inside of these green bands, only 4% above and 8% below. So these green bands are really strong pivots to tuck back in. Very rarely does it break and go. When it sells off, look, it tucks back in. When it rallies, it tucks back in. You can see it's like on the dot pivoting. We actually base this on the margin requirement. So this is what we do that's different. I might be some like entertaining goofball or whatever on stream. But I'm an accomplished mathematician with chemical engineering degree. I'm a mathematician and I'm a programmer. And so I create stuff that is a little more substantial, more like hacks or exploits in the market. So we create like 80%, 90% pivot things based on certain things. The margin requirements based on the risk of market makers going into default on certain trades or having margin call probabilities. So being up here is a 4% chance that we close up here. 88% of days stay down in here, but I never fade a bull market. As a matter of fact, I'm more likely to chase a bull market if a strong pivot exists on the outside that produces gamma hedging that's positive, which is here, which is why I had the long on the chase. A lot of people are fading this. I tweeted the bull markets back and I'm longing at the top. So there's a difference to what I do and other people do. So the pink line is one risk interval above the starting point. Where I get it from is from the platform. The platform automates most all of this for me. So here's how I calculate it. It's super simple to do. You'll go here. From the start of the news event, it's just a certain distance above. You go to our platform, you subscribe to our platform, you click this button on the table. For S&P futures, it's 42 points. This updates once a night when the margin requirements change. This is 155.5. So when you break through, let me show you how important that number is, okay? It's an actual exploit. This is what we do as futures exploits. I read the patents the CME Group put out, and I know exactly the mechanics of what makes the Globex spin. Does everybody see when CPI moved? Do you see the first place it stopped? Exactly 42 points later. This is like why when you read our reviews, people are like, this is the most eye-opening shit I've ever seen in my entire life. It's not even a close second place to like the quality of what we teach. We're teaching you how the futures market, how the casino's rigged. Okay. NASDAQ, exactly that distance you see. Does everyone see this? I can't make it up. This is a distance that we give you in the platform 155.5. Do you all see that that is the first pivot that you touch? You see that? Look. On news events, that's the maximum span on a news event. You can't see it on the minute chart, but you go to the tick chart and zoom in. Watch what happens. The machine cares a lot about that level. Okay, let's go all the way back to it. Look where NASDAQ just walks right up to exactly 155 points later. And then it starts to ask the question, where do I go from here? This is an exploit of a program called SPAN that the CME group created to make margin requirements. Does that make sense? So when you get to this level, you see these big market maker orders popping out. Market decides where to go. So that pink line is what we call catalyst is active. When a catalyst is active, the market can behave a little irrationally. Typically, we have a rule that like when catalysts are active to the downside, absolutely no trading. When catalysts are active to the upside, I long only with a very small position, which is why I'm long with 2. And I'm only long on a dip off of a high volume node, which is another thing. Incredible. Thank you. Appreciate it. So our courses that we teach you how to do all this, and our platform gives you all this information. What we did was we made indicators that reverse engineer the actual exchanges stuff themselves. This is in technical analysis. If you see arrow chart, my indicator has to be on our platform, but you can put their charts and our charts next to each other, or get the information from our stuff and just transfer it over. Like I said, I was hoping to lose $1,000, and I'm kind of disappointed that I'm making $1,000. But whatever. Oh no. Even with the sheer amount of RAM that I have, I tend to have so many things open. My shit crashes sometimes. Well, I mean, I'll take the $1,000, whatever, but I was kind of hoping to make 20. I was saying I want to lose 1,000. I don't want this to go up, but it's going up for my target. I have to take the mechanically correct trade though, right? I can't come in here and be stupid and not take it. It's the trade that makes sense. All of our indicators are high volume nodes. Doesn't matter what it is. They predict volume in certain instances. The green line is volume predictor. The pink line is volume predictor. The orange line is a volume predictor. The blue line is a volume predictor. They predict volume. So I'm only trading like traders are going to be, if that makes sense. Pay $20 for the classes. What the platform now? It's $99 and doesn't include the classes. Yeah, it does. So the platform is $99 for the first month, and then it's $200 every month after. But there's a deal right now that the platform is $150 a month for life if you lock it in now. We're doing this brand new New Year's deal thing. So we want to make it a little cheaper for people because everyone took the classes last round, and they're like, dude, I'd love to get the platform, but $200 a month is a lot. And I'm like, okay, well, we're making it $150 now. So all you do is you sign up, you go to the Rocketplace site, and you sign up. And you sign up for the actual platform. And then I'll just refund you the courses if you bought them. So you go here, and this is it right here. This is just yearly, monthly, lifetime. All right. Ooh, ooh, ooh. Should I close at the yellow line? That is my exit target. I usually scalp to exit target. You know what I should do? I'm going to take the profit. Whatever. I should have closed at yellow line to begin with, but scalping from here to here is a mechanically correct trade. I'm going to close everything out and probably call it a day, but I'll hang out with you guys for another hour to answer questions. How about that? Do I have plans to have a lower tier that just gives out the numbers? Unfortunately, that is the lower tier plan. We used to have a, time when it was lifetime only. You had to buy the platform for like $3,000, and then the monthly plan is the lower tier plan, and it covers our overhead because to be able to do the calculations, I'll tell you what we have. We have the most sophisticated back-end options data processor of any platform there is. We're probably stronger than Thinkorswim because because nobody does what we do. We take the raw opera feed, which nobody takes. We take the raw opera feed, we roll it up and process it in the usable data. And we have a whole army of server computers running just full time crunching hedge pressures for every stock that exists. There is so much data that they spin out, Opera does with the options data. It costs tens of thousands of dollars a month just to do the calculations. So the overhead is tremendous to give you guys these numbers. Unfortunately, the mathematics are so sophisticated and so heavy with data input that it takes a lot just to do the numbers. So I'd love to just give it away if I could. Actually, that's a lie. I'd still charge you something for it, but I'd love to make it less. The prices to return on that, it's expensive to just do the calcs. So you know here's how many servers we have running. We have 5 dedicated just for this number, this number, this number, and this number, the walls and hedge pressures. We have 5 dedicated server machines of 10 threads each. So 5 dedicated, 10 thread. So 50 processes are running simultaneously just to crunch 4 numbers. Just for those 4. That's many thousands of dollars a month just for those servers, just for the hedge pressures. It's a very math intensive computation, but you know what it does? It predicts the high volume pivot based on options every time on every stock, and it's never wrong. I can't reveal the location of our server architecture for security reasons, right, to prevent hackers and stuff. But I'll tell you, our servers we have different servers for different mechanisms that do different things. So our infrastructure runs on 3 different types of server architecture in 3 different places. So that's so a brute force attack doesn't take down one thing and take down all things. So, do I teach you, give an idea? Yes, I do. I am going to read you guys. Like I close out my position, by the way. Let's have story time. Like I say, I'm a terrible salesman. People tell me I'm a terrible salesman. I'm not good at this. I should probably sell harder. You can read the reviews of what our class is about. This is the class that we teach. People say something like this is a game changer, amazing platform. Hold on, read what people say. Completely different than anything you've seen out there. The best deal on the internet for the $20 thing. Matt really takes the time to explain things through live Q&A, gives accurate representations of the statistical probabilities of the outcomes of the setups. Cannot recommend this enough. I don't have much time to study everything Rockstar R's, but I'm giving them open level direction. It's what I need to add. My existing trading strategy. There's absolutely nothing like this. There are things here you will not find anywhere. Spend $20 to make your trading life better. Great idea. This is what people are saying. These are the customers here. I joined July of 24 and sim traded for the first week that went live. Have since had every week. Profitable ever since. Again, I don't tell people to say anything. This thing is revolutionary. The quality of coaching consistency put daily by Matt is exceptional and for an amazing value. This is the reviews from the site. So please read that if you want to hear what you're asking me. Do I teach? This is what people are saying. Been a member for 3 years. The techniques run like any other. The most information dense trading instruction I've ever seen. Is like no other price-based action key you've ever used, and I won't be going back. Only service I found that not only someone can explain the market and me the moving parts, but also provides data that is useful. Best trading platform for day traders. Very good product. I've enjoyed it a lot. It takes a lot of very complicated concepts and presents them with clean visuals and simple to learn kind of stuff. So this is what people are saying. A whole different way of trading. Absolutely mind-blowing. A game changer for futures trading. I mean, these are the customers, and it's all been 5 stars. So if you guys, like I said, it's $20 because we don't on this. I'm not doing this to make money. It supports the platform and it pays the bills of our developers. So you guys supporting the classes, we love teaching because I love giving you guys guidance and teaching you how this works. Software that gives a true edge, blah, blah, blah. If you have a setup, provides pivots like MHP are spot on. Works really well to add confluence. This is the MHP they're talking about. It's a great confluence to add to an existing strategy to find high volume pivots. Great people, great platform, strongest fundamentals, most reliable indicators in the space, no doubt. You won't regret it. You guys are sweet. I haven't gone through and read all these, by the way, but this is really sweet to see all this, how many lives we've touched. And it's good to see that. Like I said, $20 is not putting money in our pocket for sure. You guys take it seriously if you pay something. It's $1 a class. We had to make it something so that it wasn't free. If it was free, you'd get a bunch of yokels and trolls going there and not take it seriously. The RS platform's always impressed me, and I can't wait to dive deeper. I'm just starting the course material, personal goals, become more disciplined. Yada, yada. Ready to love trading more than ever. What Matt teaches in the course is mind-blowing. He isn't kidding. Always do hedge pressure rebalancing but holy cow, we have hacked unhideable data feeds and turned it into a tradable system. So the idea is, people like what it is we teach, and hopefully you will as well. Like I said, that's what people say, and I don't pay people to say anything. That's their own desire to go out there and post something nice. We teach you 3 really strong mechanisms. Number 1, how to find high volume pivots. That's all that matters. High volume pivots, which means I only trade at places that matter. Today, I'm either longing from there to 60.14 or my yellow line, which was there to close out, because I'm gonna be done for the day. If you break hedge pressure, it's an event and it falls to there. At this interface, we have an indicator that tells me if that white line's gonna bounce. If that's greater than 0, then we bounce. If it's less than 0, we break and fall all the way through here. I have a long setup from here to here that I take, and I have a long setup from here to here that I take every single time. These ones at the bottom are known as my favorite pivots. Bull zone bottoms and bear zone top to bull zone are my bread and butter. I make all my trading money on those setups. Like when I was trading, I'm like, I hope I'll lose $1,000 because I hope we fall to my favorite setups to take. But hell, I'll take the, whatever it was, $1,000 win off the technical pivot. I have to take the 90% pivot right there because it's the right trade to take. But because we're out of balance, that catalyst is active, I trade it small. Instead of hitting it with 5 contracts, I hit it with 2. And again, the second thing you're going to learn besides high volume pivots is betting techniques. This is why people have their minds blown. They didn't realize the reason that they're not doing well in trading is not because their indicators are bad. It's because they're bad. They don't know how to bet. And we teach you the betting strategies that let me win trading contests. You guys ever read my Twitter feed? I go in and I trade in global trading contests, and I usually win or place very high. The last contest I did was a global trading contest, and I got first place. There's a reason I win, and it's not because I have magic indicators. They help, but it's not because of that. The reason I beat people trading is because I'm an expert bettor. I bet the right amount for the risk I'm taking. And the most of the class is betting techniques. When to average in, when to average out, when to cut your position, where to set a stop, where do you double down, are there second entries, where's your exit target, how much to trade. That's the part everyone's missing in their diet, and that's what we teach. Do I use volume profile? We do something even better. We predict volume before it happens. Volume profile tomorrow will state that there's a high volume node in SPY or S&P today. Okay, so what we have created is a way to predict tomorrow's volume profile today, if that makes any sense to you. If you look at tomorrow's volume profile, well, let me show you. Like, if you're a volume profile tomorrow, right? Volume profile is going to probably say, oh, there's a high volume node here, and if we've traded through there, a high volume node. Tomorrow morning, I'm going to look at a volume profile, and it'll say there's a high volume node here and here. But today, I could tell you that there will be a high volume node a day ahead of tomorrow's volume profile by showing you where high volume will be with consistency. So what people actually have stated is that we've created a way to predict the volume profile a day in advance. So MHP is a guaranteed high volume node when you touch it. It's calculated at 9:30 this morning, and it doesn't change. Okay, when you touch this orange line, it is high volume no matter what, without fail. It is 100% accurate. It's a hedging thing that has to do with options. It's a long-winded answer. I wasn't really much of an options trader, but I'm a math genius, guys. So the mathematics of options is something that I can just see and understand. And so I learned when I was a kid, that I had some magic powers in math. I'm pretty much average at everything else, but math, I have like a magic ability. Okay. And I had this understanding that when I saw the Black-Scholes equation for the first time, I told myself I could predict a volume in futures through the tandem nature of futures have connecting with options in the S&P underlying derivatives like equities, like SPY and stuff, ETFs. So I was like, I can use SPY options to predict pivots in futures. And I don't think anybody in the world, in the retail at least, has shown you that. But what it ended up coming down to was that I knew if I could find where volume nodes will be, I can predict tomorrow's high volume pivot, but today.
So a day in advance, whoever asked that question. So what people say is we're the people that predict volume profile as like one of the catchphrases people throw out there. Matt's the guy that predicts the volume profile. We can predict all kind of stuff before it happens volume wise. Stock market, you can't predict it all. It's random. Price is random. Movement's random. We have statistics on some of the things we do. So we teach you high volume node, how to predict them, how to find them. We teach you betting techniques, and then we teach you avoidance techniques. So an example is high volume node is what that is example is going to teach you is where is a good spot to trade from, whether you're up or down. It doesn't matter. And this is all educational purposes, so it's not investment advice. But here's high volume, here's high volume, here's high volume, here's high volume. Nothing else matters. I'm not touching the price anywhere there. I'm not touching the price anywhere there, nowhere there. I'm acting here, here, or here. That's it. So I'm acting where I know volume will be, and the fact that we touch it and there's your volume proves that we know what we're talking about. Number 2 is betting techniques. How much do I bet? Okay, that's the second thing. And number 3, and I have a whole system for betting. Why I put 2 instead of 10. The last thing here is avoidance, and that's the part that makes people love what we do here. That's where all the good reviews come from. The avoidance techniques. We have indicators that tell you a crash about to happen. We have indicators that tell you that the market is likely to be volatile and choppy and irrational. You read my tweets. They're spoken slightly cryptic, but they all mirror what I'm teaching. And we teach you guys how to read the market in a different sense. Hopefully you like it. So watch this. Like here's my Twitter. Like a couple days ago, I said, January 14th, we're saying all 3, the bull market's coming back. 2 of our 3 greater market indicators, which thing we teach you as well. We're back to being bullish, at least for now. So yesterday we're calling the bull market is back. Let me read something. About the volatility. January 13th. This will be the craziest, choppiest news week in years. PPI, CPI, retail sales, yada, yada, the housing starts. The market is so sensitive to news right now, and the forward curve is flattening well into February. High EV VIX not help things either. Trade curve, the most craziest, choppiest news week in years. And it has been. It was absolutely crazy and choppy. And you guys remember yesterday, right? Yesterday was such a stupid trading day. I had a big trading day. But look at this. Y'all remember yesterday's trading day. Crazy and choppy. We have indicators that can tell you that it's going to be like that. And so, today, I come back in the morning and I say, breaking news, the bull market is back. All 3 of our greater market signals. And the 4th is what we call greater market. So not only do we teach you pivots, betting, avoidance, but we teach you how to understand is the greater market bullish or bearish. And the greater market today is 100% bullish. Greater market. There's 3 indicators we teach you that tell you is the market bullish or bearish. I ain't fading that high. I bought the dip. Made some money. And so the idea is that the bull market is back. A lot of people might be trying to fade this. I am ready to be bullish. And so the greater market has me the ability to kind of, was my goal position reach in the tops of leaderboards? I want to be at least in the top 10 this year. If you want to sign up for the platform, Dominic, just sign up for the platform. It won't automatically upgrade your account. You have to sign up for it. But I'll cancel your $20 sub to the courses if you upgrade. If I join, can we go over YM sometimes? Yeah, we can. We're doing upgrades to our risk interval table to include YM and some of the ones with the CME. Like the CME group is a constant pain in my ass sometimes. I love them to death. I love the group. I'm not talking shit. But they changed their website so much. So I wrote a bot. I literally wrote a bot that scrapes the CME website. We read their website, okay? And they publish all this information. My bot goes to their website, reads it, and feeds the data to our servers. And then we do all kind of calculations from it, like risk intervals, DD bands, whatever. And they go through there and they change their format every once in a while, and it breaks my fucking bot. Anybody that's a programmer knows that a web scraper is a very, very maintenance heavy sort of thing. If they change their data, like put a comma here, put a space there, bots aren't that good at catching that change. So right now we're repairing the bot after the latest CME group started moving maintenance requirements from span 1 to span 2. This might make no sense to any of y'all. Don't even worry about it. It's stupid CME group talk. that goes over everyone's head, and they create these things that are so complicated, so they go over your head, so you don't investigate it. When somebody like me goes and reads it, I'm like, oh, I can create pivots from these margin requirements. This is really simple to do, and it just takes a mathematician to code all that stuff. What they do is they make margin requirement changes using a program called Span, and now they're rolling into a new one called Span version 2. It's a whole new, more sophisticated equation. It just creates margin requirements for futures. It doesn't really affect you much with your discount brokers, but it affects them. It affects clearing firms. It affects the risk of the trade. But a margin requirement tells you an expected range of futures when there's an event. You didn't know that. I did, because I read the patent. And I will tell you, the pink line is the expected range on a simultaneous event where the market moves unobstructed. So the next place liquidity is tested is an exact distance you can calculate, which is there. And our platform gives you that number every single day. So we're like they call us the wizards of the market, or the Einsteins of the market, or the mathematicians. Although Peter owns Einstein of Wall Street, I don't like to be called the Einstein. There already is one. But because we're just mathematicians, a little bit different. Very rarely do mathematicians go out and assist the retail world. They usually start hedge funds and go out there and make their billions in silence. But we thought it'd be cool to make complex market machinery simpler for people to use. And of course, in this calculation here, this is the NASDAQ level from the bottom of the event. It's where the market is seeking for liquidity. There's a limit that happens here, and liquidity is simply injected at that spot. It causes high volume. And CPI as well, it's right up to it. This is a pretty cool thing. A semicolon, yeah, fucking an extra space, so they put a capital letter in there, and then the bot goes blah, 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 and breaks down. Price is random. Price 3 times supported the yellow line. Yeah, price is random, but there's some statistics and things. Does greater market include the range bound along with bullish and bearish? Yes, it does. Matt, check off topic in Discord. Okay, is QQ still looking weak till the end of February? Nope, it's completely flipped overnight. Bull market is back across the board. QQQ has resistance, but the bull market is back on bull support. Bull market is back. I said bear market was back right after Fed, and now I'm saying bull market is back. Look at QQQs today, man. It's not strong, but it's stronger. S&P bull market is back. QQQ, a little bit of strength, a little bit of weakness, right? And QQQ still has bear resistance here. So QQQ is still volatile in this range, but you know what? The sell-off is done. So I'm expecting this to test in this range here. I'm not expecting QQQ to break highs yet until March. So we have another choppy kind of bullish-ish month, and then March is where we get our breakout. So the support is in, the rally is not. That's my opinion. Again, I'm some stupid fucking schmuck on the internet. Don't listen to what I'm saying for your investment advice. But my opinion is that we have resistance here and support that's getting better and stronger, and then bear side is just hemorrhaging again. So this is short squeeze when you see a big slope down of these light gray boxes. NASDAQ is filled by short squeeze. So whatever like megaphoning type pattern we have in here, it's consolidating. It's going to break out in a month. So yeah, we're fucking back. That's what I'm excited to see. Now, again, anything could happen. News can change everybody's mind like the Fed did one time, but structure is hedged in a way to protect against bull run. So right now, the structure is there for this to rally and break highs by March. It's incredible that whatever scare the market had is just a scare. I love to see the bull market back. Now, QQQ is not as beautiful looking as the S&P, but the S&P is where you make all your decisions because the NASDAQ is not a real index. The NASDAQ is a tech, healthcare, and telecom heavy index that ignores a big piece of beef in the market, which is financials and energy, which is a huge part of what the market even cares about. You know, like when you look at PPI and CPI and you look at the core to exclude energy and food, you have to remember that a lot of your consumer staples, consumer discretionary, and energy stocks are energy and food, and it's a big part of what inflation's affecting. And the NASDAQ doesn't even touch it, so I don't consider NASDAQ a real index. So when I look at greater market, I just care about the S&P. And you get all the information in SPY. Bull zone sloping down, bear zone sloping down means nothing but a quick breakout target for SPY. The S&P is going to carry, which means energy is going to carry, and healthcare, energy is going to carry, financials are going to carry relative to everything else. They're going to carry hard. They're going to do better. With the CPI even lower, they're going to carry even harder. I haven't even looked at this today. Let's see who's winning today. Who's winning the day? Fucking financials. Like I said, energy and financials is going to carry us, not tech. I'm so good at this stuff, y'all. Like, listen to me when I talk. The S&P is that's where the beautiful is. Guess who else is carrying today? Consumer discretionary. Staples not so good, but at least the S&P heavy stuff. And they're the stronger of all the indices. They're the stronger of all the sectors right now. They have earnings today, yeah. Some of them do, right? But the point is that the idea that NASDAQ is not as strong looking as the S&P is because S&P has a lot of strength in areas that the NASDAQ doesn't even cover. So like we can look at the monthly map on the XLF, right? We do the same thing. What are financials going to look like? Look at this. While they had earnings today, look at the strength, right? Complete short squeeze on financials. This is lovely to see both the top of this and the bottom of this sloping down is extremely bullish. Financials are going to carry. As a matter of fact, even if everything else is weak, I think financials from this gap are going to continue to go and double top within a month. I still feel like energy is still going to be good. Not as good as financials, but still decent. We can run these maps on everything. Let's see if we get anything. And yeah, energy, the same boat. Bull support and getting stronger. So energy is carrying, financials carrying. That's why SPY looks great. NASDAQ looks blah, because the tech sector is still kind of the shitty looking one. And we can look at the XLK just to prove that really quick. And the XLK, look at this. It doesn't have any, it's like a choppy mess. There's really no inference you can make from this. There's no real good distribution. So tech is still like a choppy thing, right? And that's why we're not rallying this month, because tech needs to figure itself out. It's megaphoning. So we still have like a choppy month because tech is still going to kind of like be blah, while financials are going up and energy is going up, which is going to keep the S&P from collapsing. So because of that, we're in what I call a transitory market. So the market is building to be bullish. And the minute tech stops selling off, which is not this month, it's next month, is when we get the rally, which is March. You're welcome. All right, I'll see you guys. I got to get out of here, but I'm going to go to the class. And this is why. Financials and energy and consumer discretionary and staples, I believe, are going to carry the market this month and prevent us from crashing. Volatility is likely to collapse. And before I go, let's take a look at this. Remember, we roll over VIX monthly options next Wednesday. And today, baby, VIX is no longer bullish. The volatility is consolidating itself, which means VIX is stable, which means there's not going to be big waves of volatility anymore. And last but not least, let's take a quickie look at the VVIX, because the VVIX should be falling as long as it's closer or below 100. We're back to being bullish in the market, which is great, because I love trading when VVIX is below 100. No more you can have choppy, dog shit, volatile days like you did yesterday. That is VVIX right there, ladies and gentlemen. This nonsense and this nonsense that I tell people, I usually sit out on a lot of this. So daddy has all his money to attack this market when shit gets to be stable again, which is right here. Y'all, I see all those emojis flying, you guys. That's it. We are on the hinge of flipping back to being bullish, which is so lovely and fun. And all the bears out there can suck my nuts, okay? Because I'm going to tell you, that's a math expression right there, because we're all squirrels here. All I got is nuts. I'm the biggest nuts on the playground, because I'm the one yesterday that said the bull market is back, and I'm saying it again today. The more you know. All right, I'm outie. Don't forget, 2:30 Central, 3:30 Eastern. We will be live. $1 per class. That's it. And that is a psychological thing, so you take it seriously. I don't make any fucking money on that, but $1 a class will teach you everything it is we teach, and you will take it seriously because you paid a little bit for it. That makes sure that you come in and go kick ass at the end of the day. And that's why we have all 5-star reviews, because people take it seriously. You'll learn something. 3 days, you don't like it, get your full $20 back. But it's a book you can buy with the full refund attached. So check us out. You sent me a DM, Frank. I owe you an ETF account from yesterday's contest. I got you, man. Glad I'm feeling better. I'm slightly feeling better, but iDoc is still kind of dying, so I got to go take care of her today. But don't forget, we're going to go over, we start over our 20 days mind masterclass. Profitability mindset is to teach you the rules of what profitability is all about. It's about finding only the places that are important to trade from, avoiding the noise, teach you betting techniques and strategies, and to teach you market avoidance techniques. Why I sit out under certain conditions, why VVIX above 100 is important. Very important. How I knew yesterday was going to be a choppy nightmare. I tweeted something about it before it even chopped around. I said, this is going to be the choppiest, craziest news week there is. And it was. And now I'm saying we're back to stable. Why? Where do I get this stuff from? The stuff we teach is going to be a great tool set for you. We'd like to invite you to check it out. Take it with you. Come on over. So we start at 3:30 today. The courses are recorded. You can watch them after the fact. But sign up on the website. I'm going to type it in chat right now. We start at class 1 today. That's why very important. If you ever were considering, you have to join today or you're going to start late. We start at course number 1 today. So come with a notebook. Get ready with a pen and paper. Get ready to write something. We're going to go over everything from scratch. We start off in the first class teaching you what's called the blind monkey strategy. We have a trading strategy where a blind monkey can make money over time, randomly trading the market with no indicators whatsoever, just randomly picking a time and randomly trading. It is a winning strategy over time, but it's not where the monkey enters, it's how much the monkey bets that makes that a winning trading strategy. I wrote a program that proved it. And all it does is it proves to you why you're losing in the market, because it's considering something in this program that you don't consider. And it was designed as an eye-opener to teach you that there's something more important than your little concoction of green, pink, purple, blue, yellow, orange, dotted, dash, whatever fucking lines are on your chart that do not make you profitable. You're betting correctly is how you become profitable. So if you'd like to take a masterclass in betting, we start today, 3:30. Go to the Zoom calls, go to the Discord if you need help. We will guide you to the right place, but the Zoom link is posted in the Discord. 3:30 Eastern, we start class number 1 today. 20 classes, $20. All right, we love you guys. We'll see y'all then. Get ready to have your minds